capable of this high-end computing. That's kind of a clean way to invest, but also then on the application side, companies that are rolling out the capabilities to deploy AI, like a ServiceNow is one example, but it's broader than that. It's beyond the technology sector. It's into industrials, it's into healthcare. So you really have to dig deep to find those individual companies that are being successful at this early stage in starting to deploy the AI capabilities that are just emerging.
I'm loving this entire show because we're going to, in many ways, pick away at all these different ways of telling the story. We've got CoreWeave coming on, of course, one of these new hyperscale entrants almost, offering new data center footprints that's going to be closer to the companies that need the access to the compute. You're then also going to be discussing this new AI push towards regulation, but ultimately standards and investment coming from the US government. We just had Chuck Schumer, of course, write that key AI thought leadership piece. Basically, there's no real regulation in it yet, but we're delving into that. But all of this very much focuses on the US and at bits China and the worry there. But what about Europe? What about Japan? What about other areas that you can invest geographically, Joanne?
Yeah, I mean, obviously one of the big trends that's ongoing that's related to this space is the desire for, let's call it self-sufficiency regionally, to have, for countries and regions like the US and Europe, to have their own capability to manufacture those high-end chips. Whether regulation and how regulation evolves over time is a really hard thing to sort out at this point. And so we don't try to make bets based on regulation changes. It's just sort of too early to know what Chuck Schumer's and that bipartisan group's proposals will actually mean. So instead, again, what we can do is look at how the subsidies are evolving and how the tariff barriers and restrictions are evolving to push the manufacturing of advanced semiconductors around the world. And what it means, right, is we're going to get more chip manufacturing, which is good for the equipment suppliers, by the way, and probably get some cheaper chips as a result of a bit of overcapacity over time.
When you therefore look at some of the startups coming in, when you think about where to allocate to where's already done well, is NVIDIA, ahead of its earnings next week, still at the right valuation point to enter?
Well, you know, a company like NVIDIA has many years of growth ahead of it, and its valuation reflects the expectations about how high that growth will be and for how long it can be maintained. And right now, NVIDIA, with its chip technology, is well ahead of competition. Yes, AMD is coming along, and they will definitely have a good chip in the race. And we talked about Broadcom with their teaming up with Google and others. But ultimately, NVIDIA has not only the hardware, the most advanced chips with the most capability for training AI, but it also has the software that is needed to make all of that work, that CUDA software that it's been developing over decades. So it really does give NVIDIA a substantial and defensible lead for several years to come. That doesn't mean that we're not going to get news flow that disturbs those long-term forecasts, and that could cause disruptions in the stock price. And that's why we think for NVIDIA to be held by clients in our growth portfolio, it's a substantial position. But in our balance strategy, where clients have perhaps a more conservative view on what their portfolios need to do over time, it's a smaller position because of the volatility that we're likely to see as expectations can be disrupted at any time.
Joanne Feeney, how are you and Advisors Capital using AI at home and at work?
Well, I know from talking to the marketing guys, for example, that they're using AI to create, we just had a conference, for example, they created a lot of the background material for the conference, the images. I worked with a colleague recently to do a podcast on behavioral finance, and he generated notes using AI, questioning, hey, what did Danny Kahneman contribute? And so I saw all these great notes. I'm like, wow, it's impressive. He said he did it in 15 minutes. So it's an incredible time saver for folks quickly needing to generate content or get quick answers to questions and to generate images for marketing materials.
Joanne Feeney, Advisors Capital Management. Great to have you back on the show. Thank you so much. Now, coming up on Bloomberg Technology, we have all the details on that OpenAI and Reddit relationship and a new partnership. Stay with us. We will be right back. This is Bloomberg Technology.
on Season 2 of The Circuit. We're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Me too! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money. You've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
So OpenAI unveiled a partnership with Reddit that will bring the social network's content to ChatGPT and other products, but also allow Reddit to add new AI features to its online communities. Let's bring in Bloomberg's Shireen Ghaffari for more. A bit of a scramble last night because the market reacted, right? Reddit shares now really high. Just give us the basics of the deal in both directions.
Sure. So OpenAI, which has kind of an insatiable desire for data, right, to train its models and to just show data within its ChatGPT app, will now have access to Reddit posts. And that's going to happen through the Reddit API. So, whatever people post on Reddit, OpenAI now has the legal right through this deal to actually use that in its products and to train its products. On Reddit's side, they are presumably getting some kind of financial benefit from this, although the terms of the deal have not been disclosed.
Also, perhaps they fold in OpenAI's own large language model and AI applications within the use of Reddit. It seems as though there's going to be advertising involved. And the question to me, Shireen, is what do they get that's different versus the Google agreement? We know the amount of money, it seems, that they got from Alphabet already. But why, therefore, so embed OpenAI from an actual AI architecture perspective and not Google's?
I think that these media companies, social media companies, publishers, they're kind of looking to just get the most value that they can out of the data that they have, right? So I think the deals are very similar. I think, we just have a little bit more information about how much the value of that Google deal was. On the advertising front, because there was a mention in there in their release, I actually clarified with OpenAI. So all that means is that OpenAI is actually going to place ads on Reddit as part of the deal. So we're not seeing a kind of deeper ad integration that some may have thought.
Really fascinating. And I think also we've got to remember the history of Reddit and Sam Altman, even though it says really that it was Brad Lightcap that forged this deal, certainly as one of the key investors in Reddit at the IPO. Those ties go deep, and the fact that he was interim CEO for a short while. Bloomberg, Shireen Ghaffari, we thank you so much for talking us through the latest deal. Meanwhile, let's talk about the space race that's upon us, because we're just taking a look at Elon Musk's Starlink. It's launched frenzied competition for space dominance. Just take a listen.
The largest single constellation of satellites orbiting our planet is run by a mercurial individual who needs no introduction. It's this guy. It achieves this by maintaining a vast relay network in low Earth orbit. That's the area higher than a jetliner, but below a GPS satellite.
Right now, Starlink has more than 5,600 satellites in orbit.
And it accomplished all this in less time than it took James Cameron to make a second Avatar movie.
At one point, SpaceX envisioned launching up to 42,000 satellites.
But this speed and relative success has raised eyebrows, concerned ones in government, and excited ones in the boardrooms of potential rivals.
It's essentially a company trying to disrupt a somewhat complacent marketplace.
So you can catch the full thing from Bloomberg Originals at Bloomberg.com. It's a must kind of watch. And the speed and relative success of Elon Musk's Starlink has encouraged the deep-pocketed rivals like Amazon co-founder Jeff Bezos and his Blue Origin, which is actually slated to resume space tourist flights this Sunday after it stopped crude operations 2 years ago following a mid-flight mishap. I want to go out to Chicago and Bloomberg's Kyle Porter. Let's start with the Starlink doc, right? That was 1 minute, but it's a longer thing. Tell us about the other items that you covered off in it.
Well, thank you for having me on, Ed. We cover quite a bit of ground in those 7 minutes. We look into how the service performs, Elon's plans for growth of the service, potential rivals, and, as that 1 minute alluded to, difficulties, geopolitical and technical, with the service.
Let's talk about technical difficulties, because there's been a few launches that have been delayed of late. We're also anticipating the relaunch, or, well, sudden regalvanization of Blue Origin this weekend. Things have been stop-start.
They certainly have a little bit, and Elon's been a little bit frustrated in his getting approvals to build out the size of the network that he wants. Starlink's biggest problem is getting satellites in the air. Doing things in low Earth orbit is fantastic, and it decreases the latency, which is the time it takes for the signal to get back and down to your dish. However, you really need to think of it like filling up a bath. You need an awful lot more satellites in the air to stop your service slowing down. And frankly, they're not doing it as quickly as they'd like.
Kyle, my understanding is you and I are under orders to be awake very early this Sunday because Blue Origin will try to launch its tourism offering again after 2 years. Just give us the basics of that mission.
Yes, well, you'll be up earlier than I am, thank goodness. The plan is, after 2022, there was a mishap on, thankfully, an unmanned flight, which saw Blue Origin ground its flights. This will mark the resumption, I believe it's the 7th flight to carry a crew. And it's also going to include someone rather special. Ed Dwight, who was part of the original NASA program, would have been the first African-American in space had he been picked.
And then, not to mention what happens early next week, Boeing's first crewed space flight, maybe, just maybe, using its Starliner craft. That's been delayed a little bit. Maybe it'll come on May 21st. There is a lot going on in space, as always. Bloomberg's Kyle Porter helping us tell that story. I hope you both don't have to get up too early Sunday. Meanwhile, coming up, after a volatile week of trading, the meme stock rally coming back down to earth. I could have used all the puns about to the moon, but I won't. We will bring you the latest next. This is Bloomberg Technology.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time, we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
It is time for Talking Tech. These are some of the other stories we're following in the news. First up, Snowflake is in talks to acquire startup Reka AI for more than $1 billion. That's according to sources. Reka AI is a producer of large language models and would enable software maker Snowflake to offer generative AI capabilities. Reka AI was founded in 2022 and was valued at $300 million in a 2023 investment round. Plus, Ingram Micro is preparing to move ahead with plans for an IPO that could raise more than $1 billion. That also according to sources who say Ingram's considering seeking a valuation of as much as $10 billion. The company's been working with Goldman Sachs and Morgan Stanley on the listing and is said to have added JP Morgan to its list of advisors. And Microsoft avoids a UK antitrust probe for its partnership with Mistral AI. Last month, the UK Competition and Markets Authority announced that it was gathering information on whether the two companies threatened competition in the UK. The watchdog group reversed that decision, saying Microsoft does not have the ability to, quote, materially influence Mistral's commercial policy. Caroline.
Let's just go back to what was quite the frenzy at the start of the weekend. All the meme stocks. But now that's come to a bit of an abrupt halt. GameStop, as you see, now only up 16%, shares falling for a third consecutive day, in fact, as the company pre-announced earnings said it may sell up to 45 million shares. Let's break it all down. Bloomberg's Bailey Lipschultz. And the point here is that we had GameStop and AMC really soaring at the beginning of the week. AMC made the most of it. Now GameStop's trying to make the most of it.
Exactly. AMC happened to have that at-the-market offering in the works before, so they were able to capitalize on that, raise about $125 million through sales of new shares. They also then announced a debt-for-equity swap, so diluting investors, but trying to shore up the fact that they had, at least at the beginning of the week, north of $4.5 billion in debt. Now GameStop, to be fair, doesn't really have debt. They don't need the cash. But when I talk to market watchers, they basically said there are two times you sell shares. One when you're stupid not to, and one when you need cash. And it does seem like GameStop trying to move to capitalize on the rally. But as you mentioned, now only up 17% this week, not up the 270% it was at the start of the week on Tuesday.
And we got a little bit of fundamental news, unlike what has driven this meme stock rally. And they pre-announced their earnings. How did they fare? I mean, it looks as though revenues are under pressure.
Under pressure, missed what Wall Street had penciled in, but there are only
How many?
I would say there are two analysts who follow it, so it's not really like we can say there are dozens of analysts who kind of are sharpening their pencils to come up with what they should be reporting. But it is slowing. They are focused really on getting back to profitability. So the net loss was more narrow in the last 3 months than it was this time last year. But still, fundamentally, there are pressures. There's they need a new game cycle. They need a new console cycle. They are also battling with the fact that people download games and don't go to stores, and that's really been the bear case for GameStop even well before 2021's craze.
Bailey, hello. Happy Friday. I was talking to somebody interesting last night. Let's call them a market participant. And I asked about Roaring Kitty, and I was like, has anyone yet worked out what Roaring Kitty was trying to communicate through social media? And this person, again, let's call them a market participant, was like, do we even know that it is Roaring Kitty?
We don't. And that's why it's scary, because we haven't seen the person who operates under the moniker Roaring Kitty, Keith Gill, hasn't been on social media. He used to be streaming on YouTube and different means back in 2021 and 2020. He hasn't physically appeared, so the X handle is back to posting a number of videos. But to your point, no one's been able to confirm or talk to Gill himself to see if he actually has resurfaced after almost 3 years of being away from social media, or to read between the lines that what your source is pointing at. It could be other actors, but no one really knows.
What is interesting is that loads of people tried to play the game this week, right? People have taken to social media and said, oh, look, I made a small amount of money by buying or selling GameStop or AMC shares. Is there any sense that there was something bigger than that, beyond just retail traders playing the moment?
Well, we wrote about this throughout the week, and when you look at the trading flows on the likes of a Fidelity or an Interactive Brokers, it's a very small portion compared to what we saw in 2021. And if you look at Fidelity's platform, over the past week, the number of buy and sell orders has basically been matched. So when you look at the hundreds of millions of shares that have traded for GameStop and the north of 1 billion shares in AMC that have traded, the underlying factors would point towards this likely being some form of momentum or quantitative funds trading in it.
Bloomberg's Bailey Lipschultz. What a week it's been for you.
Yeah.
Thank you. Now, coming up on the show, cloud computing company CoreWeave receives $7.5 billion in private debt. We're going to speak to the CEO next. Stay with us because we'll be right back. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
Caroline Hyde in New York. Let's get a quick check on these markets because it has been a week. And it's been a macro-fueled week in many ways. Some of the data points shining a light that maybe the Fed can still cut. We've got, therefore, benchmarks near or at record highs. They certainly have been for the NASDAQ 100, the NASDAQ, the S&P 500, of course, the Dow hitting more than 40,000. We're just wavering on the day as perhaps we just trade into this weekend and take a little bit of profit. But Stock 600, not as strong a week. Up less than a percentage point, but still up for 2 straight weeks and still near a record high as well. Remember, we're up 4 straight weeks on the US benchmarks. That's the longest winning streak that we've seen since February. I'm looking at Bitcoin up 3.25%. It's having a good week too. And we're currently up at 67,000. Move on and have a look at what's happening in terms of individual names that are on the move. And notably, Take-Two is actually one of the best performers on the NASDAQ 100. Gaming company coming out and saying, sorry, we're delaying it again, the latest Grand Theft Auto, but at least we're getting a timetable a little bit more resolutely, and so investors seem to be in a forgiving mood, when maybe some of the numbers did have to be dialed back more broadly for this fiscal year's revenue because of the delay to the start of 2025. PDD, I'm looking at, of course, Temu, UBS upgrading their stock, saying that, look, we're all over-exaggerating the limitations of Temu into geographical diversity on the back of geopolitical threats. In fact, they think that there's still going to be a winning formula. PDD get their numbers on the 22nd of May. Who else gives us their numbers next week? NVIDIA. We're currently down by 0.8%. But Ed, what are we looking at in terms of the world of AI?
Well, a name that's very closely tied to NVIDIA. In one of the largest private financings to date, cloud computing company CoreWeave has received a $7.5 billion debt package led by Blackstone, Magnetar, and Coatue. I'm pleased to say we're joined now by the CoreWeave CEO, Michael Intranter. Okay, let me frame it this way. $7.5 billion is a lot of debt financing. It's a very large number. You are an unusual company. Because you're doing something with pace, but very closely tied to NVIDIA. So I think our audience would appreciate that you just kind of explain how you got the debt financing and how it's structured, because the cast of characters in there are also unusual.
Yeah, so first of all, thank you for having me back on again. I appreciate the opportunity to speak with you and your audience. This is a very exciting financing for us, and it follows very closely on the coattails of a $1.1 billion equity round that we completed last week. And so it's been a very, very active period of time for CoreWeave in the capital markets. The syndicate of lenders, which is really a who's who of private lending, including, as you said, Blackstone, Magnetar, Coatue, but you also have Carlyle, CDPQ, Digital Bridge, BlackRock, Eldridge, really wonderful names, really great supporters that have a deep understanding of the business and, really provide in coordination with the equity round that closed last week, and a deep validation for the solution that we are delivering to the market, our approach to building, AI cloud infrastructure. And so it's been really a wonderful few weeks here for the company as we really push towards enormous scale.
I mean, this is a big pot of money. As you referenced, $1.1 billion equity funding just done 2 weeks ago. You've now got the $7.5 billion more of debt to put to work, and it's about infrastructure. It seems to be the fact that you want to be doubling your footprint when it comes to data centers. You've already expanded into London, outside of the US. You've just got to be buying those chips and the infrastructure. So where will you put the data centers first and foremost, Michael?
Sure. So a couple things. One is that in total, over the past 12 months, we've raised $12 billion into CoreWeave. And that is representative of an incredibly capital-intensive build-out of infrastructure, initially across the United States. But now, as you said, we're pushing into Europe. We've got 2 data centers that we're building in London. We've got a footprint in Spain. We'll be up in the Nordics. In total, we'll have 28 data centers by the end of this year that we will be providing our clients infrastructure from. We tried to build our data centers proximate to population centers. Think of it like as the NFL strategy. In terms of trying to put our data centers so that they are relatively low latency providers of infrastructure. But as I said, our footprint is getting much larger very quickly, and this pool of capital here, the $7.5 billion, is really focused on the physical infrastructure that we have to build in order to deliver our products to our clients.
Michael, I think a lot of people are really starting to become concerned, or at least inquisitive, about energy and power consumption. Have you a clear strategy for energy and power sourcing in all the geographies you've just outlined?
Yeah, we do, and it's a work in progress. The rate at which we're scaling, we are continually addressing that. My background is actually from energy, and that's where I grew up. And prior to that, I really focused on environmental commodities, and so it's something that's near and dear to me. It's near and dear to the company. We have an entire team internal to the company that are building a strategy we'll have in place by 2030 as we go through this ramp. And so, we understand that there is a moral imperative to take responsibility for the energy that is required to be able to deliver this type of resource to the world.
So what is it? Is it nuclear? Is it just having to be more efficient with what you've got, go for more power efficient chips?
Yeah, so the answer is like so many things around energy, is it's a combination of a number of things, right? So a great example is in the next iteration of our technology build, we'll be moving from air-cooled data centers into liquid-cooled data centers, and the savings that are associated with liquid-cooled provide, maybe 30% more energy efficiency within the data center, because you don't have to run all the air fans, you don't have to move so much cooling through it. It's just more efficient, and so there'll be a significant step function that you will be able to achieve by just evolving the technology into the most modern, energy efficient component. The other thing to think about is from a computational perspective, the hardware that is being delivered right now is enormously more energy efficient per flop than it has ever been in the past.
I know somebody that will make that argument next week. On Monday, I'm going to speak to Jensen Huang, Michael Dell, and Bill McDermott all at the same time. The success of those companies, Michael, to which one is your fate most closely tied?
So look, we have a wonderful partnership with NVIDIA. They are absolutely at the epicenter of anyone's approach to building out the physical infrastructure for serving the AI markets. That is a reality of where we are right now, and will be for quite a while. Michael Dell Dell's an extremely important partner of ours. We require them to be able to build the infrastructure that incorporates the GPUs that we use, and so we are working with many partners across the space.
Are you too dependent, Michael, though? Are you too dependent on NVIDIA?
So the world is dependent on NVIDIA at this juncture. Their technology is defining the space, and so we work with them because our clients demand the technology that they drive and deliver into the market.
Not AMD? Not any others?
So we look at all different types of silicon. We look at all different types of solutions. But our clients have clearly indicated that for the time being, the type of silicon that they require to build their products, to build the artificial intelligence that's changing the world, is currently being driven in large part by the NVIDIA infrastructure.
Well, the share price reflects that. CoreWeave CEO Michael Intrator, thanks so much for coming on to talk about your own funding. Meanwhile, coming up, we're going to be hearing from the Salesforce CEO, Mark Benioff, about the future of artificial intelligence. Who'd have thought it? This is Bloomberg Technology.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years. An investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
In an exclusive interview with Bloomberg, Salesforce CEO Mark Benioff spoke to us about working with activist investors, competition with ServiceNow, and his outlook for the future of artificial intelligence. Listen to this.
I think I might be one of the few CEOs that actually really enjoyed working with these activist investors. I had never heard so many great new ideas in my career, including such out-of-the-box thinking. And look, we were able to really transform and evolve Salesforce over the last year, and you can see it with our incredible financial results that we had last year and our idea that we're able to continue to move forward with these incredible new characteristics of our company. In our last earnings result, we even talked about that we've started to create a dividend. That's something that was beyond my imagination even just a few years ago. So it's exciting to be the #1 CRM, to help companies connect with their customers in a whole new way. Right now, we're about to enter an incredible new world, which is the world of artificial intelligence and how it's going to transform these customer relationships. And I think we're about to see some technology that we never thought we'd see in our lifetimes. We're going to see just some incredible new ways to run our businesses.
Competition in CRM is fierce, Mark. You've got ServiceNow trying to poach a bunch of Salesforce employees. I believe they stopped using Slack after you bought it. They're trying to build more of a consumer brand. They started their own Trailblazer program. Are they trying to pick a fight with you?
Well, they're an interesting company. I just think they need to be careful. They might be getting a little ahead of their skis. We just replaced them at Disney. Of course, we already had run Disney stores and Disney guides in the park, and we had done a lot of things with Disney with their customer relationships. But I think everybody knows that when they went to have Disney Plus and wanted to have a call center, and they chose that company, well, unfortunately, Salesforce had to come in and rescue the entire operation and rebuild all of the customer success and call centers for Disney, and which was at that point had been called out as a marquee customer of theirs. Well, Salesforce is actually a tremendous company that does real customer success and delivers solutions in sales, service, marketing for so many great companies around the world now. Obviously standardized at Disney, but for so many other great organizations, banks, insurance companies all over the world, and I think we're doing pretty well on our own.
Fighting talk coming from the Salesforce CEO, Mark Benioff, as if you expect anything less. Meanwhile, the Senate's bipartisan AI working group finally released its AI roadmap this week. But it's getting some mixed reactions from civil groups, for example, who fear that the industry is playing an outsized role in shaping this legislation. Let's dig deeper with all of it. Linda Moore is with us, President and CEO of TechNet, which represents a bipartisan network of innovation economy CEOs, senior executives like the OpenAIs of this world. And Linda, I can imagine that thus far what's being said, the $32 billion of investment coming for AI, the focus on innovation is music to your ears. But are you listening to what the civil side of the equation is and the fact that they feel that regulation and guardrails aren't coming soon enough?
Yes, I understand. And they were involved in all of the AI Insight forums that were held in the U.S. Senate. And I'm sure their voices will still be heard as we go through the process. You know, one thing that I think that they need to understand and the public should understand is last summer, these big AI companies in America made voluntary commitments with the White House to secure the systems, to mitigate bias, all the risks and harms that can be anticipated. And they also went beyond that to make their own internal evaluations on all the risk mitigation that needed to be done. This will go through a committee process in the U.S. Senate and also in the House, and everyone's voice will be heard, including civil society. And our companies, the tech companies in the U.S., are working very closely with them and want to address all their concerns.
So just keep in mind, we've just seen come across the wires that Fed's Powell has tested positive for COVID. He's due to be speaking on Sunday the 19th, the only reason we mention this. However, it does say that he is working from home and will deliver a pre-recorded speech at Georgetown Law, which again was due this Sunday, so that event is still going forward.
It's not substantive codified rules or way forward with AI. When do we start seeing some concrete action?
Well, we already saw concrete action just this week. On Wednesday, the Senate Rules Committee passed 3 bills related to the use of AI in elections. 18 states have already done that. And there will be another hearing on AI policy next week in the U.S. Senate. So I expect some of this to move pretty quickly. There are other committees that will take a little bit more time, but I think you'll see pretty expeditious action here in the next few months. I can't say that every single part of AI policy that's reflected in the roadmap will be addressed, but I think that they'll make good progress in the next few months. I've been really pleased to see that AI is an area of great curiosity and cooperation across the aisle. We see such a partisanship in D.C. right now, and that's not the case with AI policy. We see people working together, and that's really great to see.
TechNet President, CEO Linda Moore, we really appreciate your perspective and analysis. Thank you so much. Now, coming up on Bloomberg Technology, we're going to be joined by the CEO of Visco. Remember Visco? The company reached 200 million. Well, exactly. It reached 200 million users worldwide. Talk about photos. Talk about their turnaround. That's coming up next. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Visco, a platform for photographers and visual storytellers, just announced first-time profitability under its new leadership, but it's also amassed 200 million users worldwide. I want to dig into that with Visco CEO Eric Whitman, joining me here on set in San Francisco. So our producer John Hyland was reflecting that, like, in the early days of Visco, part of it was the technology offering, right? Specific filters, photo editing and imaging. 200 million users is a lot. The question is how they're using it. Are they paying users? Where are they? And principally, what are they using it for?
Yeah, great question, Ed. Thanks for having me on again, too. I think Visco has had a very long journey. It's been around for 10 years, and we've seen multiple versions of the company. It's really started by creators for creators, so these were photographers, ad agency folks who were really trying to support more people like them. And, for a lot of these users, right, they come to Visco for the tools, for the looks. They come because they're trying to get a certain look, and Visco is a really easy way for them to do that. What we find, though, is people come for the tools, and they end up staying for this really healthy creative community where people can get to meet other people, get inspired by their work, collaborate on other projects. And that's what we're finding is where Visco is really sticking for a lot of folks. And as we've been making our transition more as a business to support more of those serious creators like photographers, they're staying around for more of that.
Of those 200 million, how many of them are a paying customer or subscriber in some form?
Yeah, so our business model is primarily subscription, primarily membership. So it's a fraction of that 200 million. And where we're seeing most of our growth is actually with the professional tier, which we just introduced a year ago.
Okay, and I'm assuming with the professional is more opportunity, not only to be seeing business done between brands and photographers, but also you taking yet further opportunity to boost revenue. How do you do that?
Yeah, first is really spending some time listening to our customers. And what we're finding with a lot of them, especially pro photographers, is it's increasingly difficult for them to promote themselves, to find work, to be discovered by brands or other potential clients. And especially with traditional social media and the algorithms changing, where it's becoming increasingly harder for those people to be discovered there, what Visco is doing is we're providing a great way for these people to create and express that creative identity and then be discovered by other people. And in our recent introduction of Visco Hub, this is a very smart and powerful AI-driven engine that allows people to get discovered by brands and other potential people who want to hire them.
Where are you, Eric, though, in terms of those 200 million? How many are actually just people in Gen Z, millennial, wanting a different type of social media? That's how you initially catalyzed growth. You were an alternative where you didn't want to be garnering just likes and the anxiety that came with that. Do you benefit from the backlash that we can still see and the push out potentially of TikTok?
Yeah, I still think that there's a lot of people who come to Visco because they want that safe place to engage and connect with other people. We get over 1 million signups a month organically. We don't do any paid advertising. And this is something that I think many people come to Visco for. However, that's not our focus. We do find that a lot of Gen Z who want to
in 10 minutes time now.
Professional creators or professional photographers themselves, they
Sorry, it's in 20 minutes time now, 12:15 p.m. Eastern Time. Fed's Daily is giving a commencement address at the University of San Francisco School of Management. And so again, this is in 20 minutes time. A text is expected as well.
Karen mentioned TikTok and 1 million onboard a month. Are you onboarding from anywhere specifically?
It's organic. I mean, a lot of people are just
but they've got to be coming from somewhere. It's a battle for eyeballs.
Yeah, the biggest place we're finding these customers is actually coming from Instagram. So that's our biggest referral source is people who are coming over from Instagram. Second is people just finding Visco on the web. They're looking for alternatives. They're looking for places where they can express themselves creatively in a healthy and authentic way. And Visco is that place.
Fascinating. Visco CEO Eric Whitman on being EBITDA positive, on 1 million people adopting your platform every single month. We thank you for talking us through where they're coming from. Now, that does it from this edition of Bloomberg Technology. And what a week it has been. And we brace ourselves for an amazing conversation come Monday, Ed.
Yeah, just incredible week. Earnings, AI, it all continues, and it does continue Monday. Thank you. I'm having this big conversation with Jensen Huang and Michael Dell. Recap today, though. We covered a lot of ground. You know where to find the pod. Thank you to everyone that tunes in, and thank you to those that listen to the podcast. That's where you can see it and hear it. This is Bloomberg.
On season 2 of The Circuit, we're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Me too! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass. That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
From New York City for our viewers worldwide, I'm Shonali Bassick, and Bloomberg Real Yield starts right now. Coming up, inflation shows signs of cooling, the latest data being promising. And Powell on hold, saying the Fed is awaiting more evidence before cutting. Yet investors move on, keeping bets for at least one rate cut this year. But we begin with the big issue. Can the Fed achieve nirvana?
The U.S. economy is chugging along pretty well.
We've had good, healthy markets for quite a while.
There's 1,000 things that can go wrong tomorrow, but right now everything's in pretty good shape.
I think the chance of something going wrong is higher than people think.
It's necessary to make sure that we're on a fiscally sustainable path. Of course, the higher interest rate path makes that more difficult.
Where it'll be in 6 months, how much of that slowdown we see in the bottom quartile, we have to watch the data very, very carefully.
Whatever the world is pricing in for a soft landing, I think it's probably half that.
Right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing.
The cost of living in many areas is very high, and it is a concern to Americans.
There are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect.
What the Fed is doing with rate structure is have the impact they want. On the other hand, the economy's kind of there, and now we got to be careful we don't overshoot the other way.
I think, they are doing the right thing to be patient right now.
Now let's look at the U.S. inflation picture, because a measure of underlying U.S. inflation cooled in April for the first time in 6 months, and it also snapped a streak of 3 above forecast readings, with the year-over-year measure cooling to the slowest pace in 3 years. Now you do see progress here, but remember, we are still above the Fed's 2% target, and we also had producer price indexes that were on the rise as well. So complicated story there when you look at inflation. Let's flip up the board here and look at one component of inflation, the housing and rent part of CPI. Shelter prices is the largest category within services, and it climbed 0.4% for a third month. And owner's equivalent rent, a subset of shelter, which is the biggest individual component of the CPI, rose by a similar amount. And these housing costs are one part of the inflation picture staying so sticky in the Americas and abroad. Now, one big debate on Wall Street now is whether cutting interest rates will actually bring down some of these housing and rental costs. We'll talk about that later in the show. Meanwhile, BlackRock's Rick Reeder argues that the best way for the Fed to temper inflation will actually be to lower interest rates, and here's why he thinks that.
I'm not certain that raising interest rates actually brings down inflation. In fact, I would lay out an argument that if you cut interest rates, you'd bring down inflation. Why is that? Exactly to your point. Look at what's happening now. Interest expense is growing, has now eclipsed mortgage payments. Lower income, who much higher percentage of their net worth is in the debt, credit cards, student loans, auto finance, et cetera. What's happened is you've raised the rate, and that has created a real impact. And so, but the other side of it is, you actually have an economy because of this massive transfer from the public sector, from the government to the private sector. People at higher income, middle to higher income, are now getting a big benefit from these interest rates. And that's flowing into, those are the people that spend in aggregate on services. So there's an ironic thing that I've never seen, nobody's ever seen in history.
Joining us now is Allspring's George Bory and Ed Husseini of Columbia Threadneedle. And when you take a look at a lot of this wishful thinking on Wall Street, this hoping that we will finally see at least one rate cut, you see the reaction in yields very significantly. The 2-year holding the line at 480 by the end of this week, after just being above 5% just a couple weeks ago. Do we keep holding the line?
I think so. I mean, look, I think the case for the Fed to at least start this normalization process this year is getting stronger. The labor market is seeing a lot less churn. Some of the dynamism is leaking out. The inflation story is maybe about 50 basis points away from when this process can start. And more importantly, when you look at next year, I think the case for normalizing rates is getting stronger, and that's what the 2-year yield is trying to capture at the moment.
We were talking a little bit, George, about the sticky inflation story here. And do you worry that housing or other parts of inflation won't come down fast enough to achieve that first rate cut?
That's a great point. And it is fair to say that, inflation's kind of, it's sort of stalling out is probably the best way to define it. It's not going up, which is good from the Fed's perspective, but it is, the strong downtrend is yet to really be truly affirmed. So our expectation is stickyflation continues. It will come down over time, but it comes down at a very, very slow pace.
So in 10 minutes time now at 12:15 p.m. Eastern Time, Fed's Daily is due to be speaking.
Some economic weakness.
The live video is available on her entry in the calendar, and the text is expected. Again, just under 10 minutes time now.
As you mentioned, or you highlighted leading up to the segment, identified, and the reality is the economy is doing pretty well. That the Fed doesn't really need to move. At least they don't need to move rates overall. But we would just highlight the fact that they did moderate the pace of quantitative tightening, and so this sort of slow incremental move towards a slightly easier policy, you could argue has started. The data would need to confirm that, but the expectation for an actual rate hike, we think is clear, is much further out, and is really at best close to the end of the year.
I like the word you used here, George, stickyflation. Ed, how do you see stickyflation playing out here?
Let me point to two elements, two components of inflation. There's a cyclical element which responds to demand, and there are elements that are acyclical or sticky that are the ghosts of inflation past. They're a function of the dislocation to the economy 2 or 3 years ago. Most of the inflation we see today is the ghost of inflation past, which is really important. And that's, we're talking about auto insurance, homeowners insurance, housing rents. Those are all functions of the dislocations we saw in 2020 and 2021. The good news is that the cyclical pickup in the economy that we're seeing, the economy is growing at about 3% in terms of underlying demand, hasn't translated into new inflation. And that's fantastic news for the Fed.
So, George, I'm going to ask you a question that I had just asked Ed. Do we hold the line at 4.8% here? What's the risk here that rates don't move materially higher on the short end, given the tremendous bid we have seen at the short end of the curve in the bond market?
Yeah, no, I think that also is a very good point. I think you're talking about the 2-year part of the curve. Yes. So I think that there's a good case to be made that you have good sort of carry that the Fed is stuck at the very least on hold for an extended period of time. So the 2-year, not a terrible spot to be, and that on balance, the bias would be to cut rates rather than hike rates. So from that perspective, that there is some argument to be made that there's some value there. I think 2.8 or 4.80 is very much right in the middle of the range. We are certainly happy to kind of put money to work right in and around the 2-year. Certainly, if we were going to add some credit risk in portfolios, that adds a little bit of extra yield to the portfolio. So it's not a bad spot. We would feel pretty comfortable in and around that 2-year point on the curve.
Where else on the curve? Ed, are you looking further out at this point, given you've seen such an investor move into those long ends, and they do have more uncertainties and other factors that would influence the price moves there?
Yeah, I mean, I think I would agree with the other speaker. The front end of the curve is still pretty attractive, and we're trying to build confidence to extend our duration out. Right? The fact that the Fed's reaction function, the Fed strategy at the moment is really biased towards easing. The fact that we're starting to see, again, churn in the labor market start to come down. The labor market on the margin is showing us some flags of weakness. These are all really great precursors to moving duration further out on the curve.
How do you feel about duration now, George? Do you think that there's just too much risk to get in the further you get out?
Our central message, the Allspring central message around duration is diversify duration. There are attractive spots along the curve. We take it all the way out to the 5-year. We just look at pure value. Anywhere between the 2 out to the 5-year part of the curve is where we're trying to establish kind of long core or long duration positions. That being said, there's different types of duration. Long end kind of corporate credit, particularly on the high quality side, has been a great spot to sort of allocate money. Or in the intermediate part of the curve, mortgages have had a little bit of a lumpy ride in the first half of the year, but sort of sticking with that trade as volatility comes down could be attractive. So our main message is don't get too wed to just one specific point on the curve. Diversify. Make sure that duration is aligned with the type of risk that's inherent that you want to be sort of aligned with your portfolio. And from that perspective, the curve is fairly flat. So you can take some duration extension risk, and it doesn't really cost you all that much from a give up. If it's a funded position, it can get expensive because it becomes negative carry. But depending on how you run your portfolio, there are different ways to position duration.
So don't lever up on a 10-year position.
Not yet.
Really what you're saying here. Ed, what about the yield curve inversion here? Because it's interesting. You look at where we are today. You have a lot of happy talk in the market right now, and you do still have a 210 curve that is inverted to really the worst levels we've seen in the last 7 weeks. How do you read that?
Yeah, I mean, I think it's consistent with the fact that we saw a surge of inflation come through in the first quarter. Some of that is now starting to dissipate. It's consistent with markets expecting the Fed to bring rates down over the next couple of years. And it's also consistent with longer end rates now being a little bit higher than they were pre the COVID shock. The disinversion process can be driven in a couple of different ways. Classically, the Fed cuts very aggressively in the face of a recession. The odds of that are increasing the more the Fed stays on hold. We also have brief periods when the curve inverts, when long end rates go up. Fiscal risk premium is a really key catalyst for that. At the moment, I'd say, where do you place your chips? It is likely that the curve will disinvert. I don't think this year is the right time frame, perhaps at some point next year, but we do need to see more weakness in the economy to drive it. And until we see that weakness, the front end is going to yield much better.
Long time for those steepeners to play out. Our thanks to George Bory and Ed Al-Husseini for joining us today. Now up next, the auction block. Johnson & Johnson becomes the latest blue chip firm to seize on thriving debt markets, driving the U.S. high-grade sales nearly past $700 billion. Details ahead. This is Real Yield on Bloomberg.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time, we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
I'm Shonali Bassick, and this is Bloomberg Real Yield. It's time now for the auction block, where global issuance remains strong. We're going to start in Europe. Weekly sales were near 70 billion euros, making it the third busiest week of 2024. It included Merck, which sold the region's longest dated corporate bond in the common currency since 2021, and it sold more than 3 billion euros over 4 parts, including a 30-year. And here in the U.S., blue chip names like J&J, Goldman, Ford, and McDonald's sold debt this week. Overall, there were more than $28 billion worth of sales, driving the yearly total to nearly $720 billion. And also of note, business development companies are getting in on the borrowing spree. The Morgan Stanley Direct Lending Fund and Blue Owl Credit, both with sales this week. BDCs invest in small and mid-sized firms, typically too risky or small for the banks. And speaking of credit, Goldman's Christina Minnis remains positive.
Credit has been a very good place, and people have made very good money in credit. And while there is concerns about volatility, there's actually a lot to be kind of constructive about. We have a reasonably strong economy. People's earnings are reasonably strong. And so it actually feels like a good time to be investing in credit. Things actually look decent. And again, when we look at the forward calendar, it's very manageable. And people have cash. When you just look at inflows into high yield funds and loan funds from this time last year to today, we're up 19 and 16 billion. So there's a lot of money that's flown into credit.
And joining us now is Matt Mish, Head of Credit Strategy at UBS, and Maureen O'Connor, Global Head of High Grade Debt Syndicate at Wells Fargo. And Maureen, giving you the first word here because of this issuance calendar just running red hot. How does that continue on as you see the year going forward?
Yeah, I mean, I think, listen, we've had an extremely robust demand environment since the start of the year, which has really driven spreads down to what are two-year tights and in some places cycle tights and investment grade. So naturally, companies are taking advantage of strong market conditions and pre-funding some of their upcoming maturities. You saw a lot of M&A supply in the first quarter as well. You had banks rushing to market to fund at ultra-tight spreads. We do expect some moderation in the calendar going forward. Some of that is just seasonal. First half of the year tends to be about 60% of our total volume. Second half tends to average about 40%. But we are in an election year. That can sometimes influence behavior. I think ultimately it will be the economics of the trade as we get closer to the election as to whether or not you see borrowers moving forward in that window. But I think there is some anxiety around volatility on the go forward. So while we aren't expecting to end the year up 33%, which is where we are right now from an issuance perspective, we are expecting a good 10 to 15% over and above last year's volume. So it still should be, pretty active new issue calendar here going forward.
Definitely keep it coming. Matt, what's interesting here is that you definitely see very strong demand for investment grade issuers. You have also seen incredible demand for much weaker borrowers as well. For some in the market, it's a very healthy sign of strong demand. For others, there's a lot of worries about the risk being taken on at these rates. How do you feel?
Yeah, look, I think, the demand picture remains firm. I think even less so on the fund and mutual fund side, really, spending a lot of time globally with clients in the last few weeks. It's really foreign demand. It's yield buyers, places like Europe and Asia, demand coming just because the absolute yield is attractive. In general, we've written recently, there are, I would say, a few signs that are starting to suggest that higher for longer is starting to bite, but it's very, very early stages. I'd point to SME or private firm bankruptcy filings picking up. Leveraged loan default rates have picked up over the last 2 or 3 months. But overall, the picture, I would say, is relatively constructive. We think you're setting up for a slowdown in growth. But there's very few signs, I would say, that we're entering more of a sinister downturn or recessionary type conditions, and very limited, I would say, on aggregate, very limited deterioration in credit fundamentals.
It's so funny because you see certain parts of the market that are even choosing at this point between debt and equity raises. What is the investor psychology here, Maureen, in terms of who's getting into what at this point?
Yeah, well, I mean, at least as far as credit markets are concerned, we're seeing cash come in from all different angles. So Matt mentioned some of the fund flows that he's seeing on the mutual fund side. Definitely true in the high-grade asset class as well. We're up about 40% in terms of inflows into ETFs and mutual funds in 2024 versus last year. But we're also consistently seeing a very deep bid from our liability-driven investor base. So that's pension funds, insurance companies, folks that are attracted to elevated yields. The index is sitting at 5.5% for investment grade. That is usually an entry point that has been attractive in the past. It's an entry point that's made investors money. And it's ultimately the level of yields that's what's keeping spreads at these ultra-tight valuations. But we also have foreign demand for our asset class. That will wax and wane with the cost to hedge dollars. But I think at the end of the day, fixed income and credit specifically has been such a rock-solid place to stay invested and to pick up some incremental yield in an environment where, while growth is slowing, is still very strong. So from our perspective, we see spreads in investment grade being pretty range-bound here in the near term.
Yeah, I want to talk more about that in a second here because, Matt, you do hear a lot of investors complaining about not being compensated necessarily, at least when it comes to spreads, even if you're getting the yield. When you see spreads, investment grade high yield, so tight, do you think that they are right to be pouring in at this set of valuations?
Well, I think it depends on the asset class, but if you take high yield, for example, we generally are looking for default rates to increase about 50 basis points, but to just about 1.5% for the full year. That's still several percentage points below the average. And so, you could justify what optically looks like a tight spread around about 300 basis points. I think, every market, as you get, we would say, mid to late cycle, and you have to get a little more selective in credit selection, every market's different. But overall, the answer, I would say, is fundamentally, you can justify, the aggregate level of spreads, I think, to a large extent. I do think things are at the tighter end, but we would agree with Maureen. I think you will stay here. The two biggest risks in the market, I think one was allayed at the margin earlier this week, which is another Fed hiking cycle. The second one, which, we've seen the weakness in data surprises, the second one would be a mild recession. But we think those two are fairly remote possibilities. Outside of that, I think the market, again, fundamentally looks like it's holding up. And technically, there's just a lot of strength and resilience at these higher yields.
So if we do stay range bound, what is the trading theory here when you're thinking about how investors are planning to get into this market, given that you say that there's kind of a window here?
Yeah, well, I think in your last segment, you heard a lot about diversification, and I think that probably still holds here. I think the trade that most investors are looking at just in terms of alpha generation for 2024 kind of sits in two different pockets. One is continued compression across the rating spectrum. So, you're seeing triple Bs compressed down to what are now, multi-year tights to single As. There's still probably a little bit of room to run there. Obviously, double B spreads to triple B spreads have also compressed to near decades tights. So beta compression is very real. You're seeing that up and down the capital stack as well. So borrowers able to access sub-debt, junior sub-debt, preferred shares at premiums over their senior levels that are the tightest we've seen in a cycle. So you're definitely seeing investors get more comfortable reaching down the credit spectrum, down the capital stack to pick up more yield. I think that is a trade that will continue to get focused this year. And then also the compression between financials and corporates. There's still some value in that trade as well, especially when you look at where bank spreads trade relative to higher quality corporate names. There's still about a 25 basis point differential in the 5-year part of the curve for a lot of those names. So there's probably some room for further compression there. And I think that's where investors are kind of focusing their attention right now in the near term, especially as we move into, this perfect soft landing scenario.
Matt, you have 20 seconds here. Favorite trade?
I would say in investment grade, we like the 3 to 5 year part of the curve, and we like financials, so we like compression. In high yield, we've taken off high beta, so triple C risk, but double and single B, we like areas that we think benefit from lower rates and lower inflation. Those would be areas like non-cyclicals and tech. And then just lastly, we really like Europe versus the US. So you can express that in Yankee banks. You can look at subordinated debt and tier 2 or AT1, but those would be 3 quick ideas from our side.
Matt, Maureen, thank you so much for your time. That is Matt Mish of UBS and Maureen O'Connor of Wells Fargo. Now, still ahead, the final spread, the week ahead, Fed minutes, NVIDIA earnings, and more. We will talk all about it. This is Real Yields on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, This is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal.
That deal. The deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
I'm Shonali Bassick, and this is Bloomberg Real Yield. It's time now for the final spread. The week ahead, coming up Monday, the Atlanta Fed kicking off its financial markets conference. Of course, we will have our own Michael McKee there speaking to Raphael Bostic and Loretta Mester. And of course, the health of the consumer will be in focus with Macy's and Lowe's earnings on Tuesday and PMIs on Thursday. Keep an eye, a lot of news ahead. But for us, that does it for now. Same time, same place, Real Yield next week. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Politics to the world of business. This is Balance of Power. Live from Washington, D.C.
As we make a run for the border on the fastest show in politics, welcome to the Friday edition of Balance of Power.
here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines in Washington, standing by for a critical interview on Bloomberg today, Kaylee, that gets to one of the most important issues that will decide this presidential campaign in November.
Yeah, the issue of the border and migration over it. This is something that the Department of Homeland Security has been grappling with under this administration, most notably its Secretary, Alejandro Mayorkas, who is about to sit down with David Rubenstein here on Bloomberg Television and radio. He, of course, is the host of Peer-to-Peer Conversations. They're going to be speaking at the Economic Club here in Washington. And, of course, this is just a matter of weeks after the effort to impeach Secretary Mayorkas died in the Senate after the House had indeed voted to impeach him over what they see as him not adequately doing his job, even if he is just enforcing the policies of this administration.
He's had quite a year to be impeached by the House on the same day that he was testifying to the benefit of Joe Biden in trying to sell the new budget plan that had just recently been delivered. It's remarkable. Once the articles went next door to the Senate, that was the end of that story. And now, obviously, you've got a cabinet secretary who not only just made history here, but is tasked with an enormous lift in trying to solve this problem at the border, and a president prepared to take executive action.
Yeah, already we have seen Joe Biden making some tweaks on the margin in regard to asylum. The question is, are we going to see more decisive, perhaps more sweeping action, as he knows that this is an issue dogging him as he campaigns for re-election? So we want to go to our political panel now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are with us as we await this interview with the Homeland Security Secretary. Jeannie, obviously we already have seen some small moves from the Biden administration on the border, but now that we're 100 days out from the bipartisan deal he negotiated with members of the Senate, which died very quickly after that deal was made, does he need to be doing more here?
Yeah, I think he does. And I applaud the president. I applaud Chuck Schumer for moving forward. The reality is Congress should have passed that agreement. It was, by all accounts, the toughest border security deal that we've seen in 100 years. And the fact that it was thrown out for political reasons because they didn't want President Biden to get a bill passed on immigration this year is just a shame. And so the president not being able to rely on Congress has to go it alone, and Chuck Schumer has to try to move forward. And I would also say President Biden politically needs to juxtapose his plan on the border with his opponents, because Donald Trump's plans as it pertains to the border, which are becoming very clear at this point, are going to be something that we should be talking about as they seek to deport millions of people seeking asylum in the United States.
Well, of course, we're going to hear a conversation about more than just immigration policy and border security, Rick, but this is an issue that hits close to home for you, something I know when it comes to comprehensive immigration reform. You came closer than just about anyone in your work with John McCain. We saw, obviously, George W. Bush make efforts that always brought this
Collins from ECB's Vassal now says cutting rates in June would be reasonable. Awaiting data opens possibility on rate path. Really attentive to what's happening in the US. And it seems that this year's GDP growth is to be better than expected.
Alejandro Mayorkas, to get a sense of where this debate is heading in the year ahead.
I think that he's got plenty of ammunition to really try to galvanize some support around another shot at the measure. I've seen today reports that Chuck Schumer's looking to take that bill back up and just remind everybody, maybe take another vote in the Senate. It passes there, forces the House to deal with it. I'd love to see the president, as part of this sort of border week that seems to be brewing, make a statement that the first thing he'll do, if reelected, is to reinsert this border security provision that Jeannie was talking about and into Congress, get him to pass it and sign it in the law. Make it a top priority. He hasn't really embraced the border debate, and I think this would be a great week to see him march out there and make a statement like that. Somebody needs to explain to him that his administration is going to be graded on the future, not just the past.
It's a fair point, Rick. Obviously, we have seen Joe Biden recently take a trip to the border. He actually did so on the same day as Donald Trump, about a few hundred miles apart from each other down in Texas. Jeannie, does he need to go there again? How frequently should he be at the site of the issue in this campaign cycle when he's spending a lot of time in swing states?
You know, I keep hearing from people at the border, it's not necessarily that they need politicians down there to get cameras down there and stand there and show that they are, you know, somehow addressing the problem. What the president needs to do is, if he cannot get Congress to act, and we know that that's not going to happen this year, then he needs to do what he can do legally, constitutionally, but do it unilaterally. And I also think he needs to assure the American people that security is his #1 focus, as is a humanitarian, comprehensive immigration policy in the United States. I'm in New York City. Like so many cities across the country, particularly blue, we've had an influx of immigrants who have come up, and they are making a real challenge for these cities as it pertains to education, healthcare, housing, and the economic impact of that is real. So those are things he needs to do. And I also applaud those who say, let's let immigrants and asylum seekers work in this country. We have jobs. Let's let them fill those. So there's a lot the president can do. I'm fine if he goes to the border, but I don't think we need any more photo ops at the border as much as we need action by Congress in particular, but barring that, the president.
Jeannie Shanzano and Rick Davis, a great conversation. We thank you to help us set the baseline for this important conversation that we're about to bring you now. Kaylee, this is happening at the Economic Club right here in Washington, D.C. As we mentioned, our colleague, David Rubenstein, Carlyle co-founder, host of Peer-to-Peer on Bloomberg Television, sitting down with Alejandro Mayorkas, as you can see right now on Bloomberg Television. Let's watch and listen together.
Chair of our Homeland Security Advisory Council in the Department of Homeland Security. And the jewel thief that I am, I just stole Matthew Ferraro from the law firm to join us and be a senior counselor on matters of technology.
Okay. Well, let me talk about the elephant in the room, because you were the second secretary in the history of our country to be impeached. What was it like living through that impeachment process? And is it finally over now?
To the best of my knowledge, it's over.
Okay.
So, you know, quite frankly, I have said publicly a number of times that I did not allow it to distract me. That was actually sincere. I focused intensely on my work throughout, in a week where it was an issue of greater prominence in the life of the department. I might have spent 20 minutes on it. I really just focused on my work. It had its impact on loved ones.
So it's behind us now. Though, as Will Rogers once said, and paraphrasing him, the country's never safe as long as the House is in session, right? So you never know, but it may never come back, right?
One would hope not.
Okay. So let's talk about the border. It appears that there are a lot of people coming in over the border. This is obviously one of the subjects that people wanted to impeach you, some people wanted to impeach you over. Is it really that we're getting more people coming in over the border illegally, or is it just the appearance of that?
Oh, no. The number of encounters at the southern border is very high. But it's very, very important, number one, to contextualize it, and number two, to explain it. From a context perspective, the world is seeing the greatest level of displacement since at least World War II. I think the recent report was that there are 73 million displaced people in the United States. And so the challenge of migration is not exclusive to the southern border, nor to the Western Hemisphere. It is global. And when I speak to partners across the Atlantic, it's the first issue that they raise, the first challenge that they discuss.
What is the reason for that?
So, well, one has the customary reasons of displacement: violence, insecurity, poverty, corruption, authoritarian regimes, now increasingly extreme weather events that propel people to leave. Why are we experiencing what we are? It is for those very reasons why people leave their countries of origin. We also, remember, in our hemisphere, we overcame COVID more rapidly than any other country. We had, in a post-COVID world, 11 million jobs to fill. We are a country of choice as a destination. And
We're seeing a release from Fed's Bowman here. Says the monitoring data to assess if policy is sufficiently restrictive. Inflation is to remain elevated for some time. I'll remain cautious in rate change decisions. I'm willing to hike if inflation progress stalls or reverses. Bowman repeats that my baseline outlook for inflation is that it will decline further with policy rates steady, but I do see risks. Says focusing on issues like climate change could distract bank management and supervisors. The progress on labour market rebalancing has slowed. US economic activity may have moderated, but consumer services spending is strong and business investment has strengthened. Inflation's decline in the latter half of last year was temporary, Bowman says. Says we have not yet seen further progress on inflation this year.
And so they stay for 7+ years, and the ultimate adjudication, about 20% qualify. That's quite a disparity, but people in the meantime leave, are able to stay, sometimes have children, U.S. citizen children, attend our schools, attend our places of worship, but integrate in the community.
All right, okay, I understand, but why wouldn't somebody who's coming in illegally always say they're seeking political asylum? Because based on what you just said, they're likely to be here for 7 years. Why not just say, I'm not smuggling drugs, I'm just a political asylum seeker? Why doesn't everybody do that?
Well, let's separate drug smuggling from migration. David, the fact of the matter is that we have an extraordinary number of people claiming asylum and a greatly reduced number of people qualifying for it. The reality is that people do claim asylum when, in fact, they are fleeing poverty, generalized violence, and that does not an asylum case make. But the initial threshold for an asylum case is low and purposely low, and one of the things that the bipartisan legislation would have done is would have raised the bar.
All right, so in our country, if somebody seeks political asylum and they legitimately need political asylum, is it our law that they automatically get it if they have legitimate needs? There's no quotas or anything on how many people we can accept for political asylum?
There is no quota on the asylum population, and one just has to persuade a judge.
So you've been Homeland Security Secretary under President Biden from the beginning of the administration. So how many people would you say since that time have come in over the border, the southern border, let's say illegally, seeking asylum, they're bringing drugs, they're whatever they're doing?
I do want to differentiate because we're in a political environment that demonizes individuals encountered at the border, and there's a vulnerability to painting with a broad brush people who are fleeing and coming to the United States. And so I want to separate, and I will be incessant in this, separate drug smugglers from individuals seeking asylum, or even if they don't have a basis to remain in the United States, seeking a better life.
Okay.
And so the number of encounters have been very well published. This past month, we had about 134,000 encounters.
This past month, but let's say since the beginning of the administration, is it millions of people?
It's several million people.
The perception is by, I guess, some Republicans in the House side, perhaps maybe others, that more people have been coming in under President Biden than under President Trump. Is that true or not?
That is true. Now, in 2019, there was almost 100% increase in the number of encounters at the southern border over 2018. The situation in the hemisphere was propelling people to leave their country. 2020 was a period of tremendously suppressed migration throughout the hemisphere and around the world because of the COVID-19.
When people coming over the border illegally on the southern border, what percentage of them are really drug smugglers?
The majority of fentanyl, over 90% of the fentanyl smuggled into this country is smuggled in passenger vehicles and commercial trucks traveling through our ports of entry.
So it's not people carrying it on their body?
It is not people carrying it on their body.
Okay. What about people who are hired, who want to get a better life? They hire people for money to get them across the border. Is that a big problem as well?
So let me go back and make one other point about the ports of entry. The majority of people arrested seeking to smuggle fentanyl into the country through commercial trucks and passenger vehicles are United States citizens. So
what do you do with them?
So well, they're arrested for drug smuggling, and under Title 21 of the United States Code, they're prosecuted. So with respect to your question about, people coming across the border, what we need fundamentally is a reformed system, a legislatively reformed system. We are in 2024. The world has changed. Our immigration system was last changed in 1996. We're in a different world now.
Well, there was legislation that was developed, I think, in the Senate, bipartisan legislation, and it got stalled, let's say, in the House. Would that have solved our problem had it passed?
It would have been a transformative change in managing the number of people we encounter.
Well, what was the main thing that would have been in that law that we don't have now that you would have liked to have?
So we would have taken a 7+ year time period between the time of encounter and final adjudication and reduced it to as little as 90 days. And that changes an intending migrant's risk calculus, because if they know that they can stay for multiple years and work and make more money than they can, and safely so, than in their country of origin, they will decide to make that journey. If they understand that they have to pay their life savings to a smuggling organization only to stay for a matter of weeks, that is a very different risk calculus. And one of your prior questions was, do they pay people to assist them? The world of migration has changed dramatically over the last even 15 years. We're not dealing with the coyotes that I dealt with as a federal prosecutor, where they smuggled 2-3 people at a time. We're dealing with extraordinarily sophisticated smuggling organizations in a multi-billion-dollar industry that is also international.
But that industry, is it one designed to bring drugs into the United States or designed to get people to come to the United States for which they get a fee?
It is the latter, but what we are seeing, and it should be unsurprising to everyone, that we're seeing a, not quite a merger, I would say a synthesis of transnational criminal organizations and the smuggling organizations. There's so much money to be made.
And fentanyl is coming from China, is that true?
Well, China is a primary source of precursor chemicals and the equipment used to manufacture fentanyl.
So how does it get over from China to, let's say, Mexico?
It is shipped to Mexico, and it also comes domestically to the United States and follows various transit routes, and which is why I engaged with my counterpart from the People's Republic of China to address this fact.
The people who are now coming over, are we separating families? In other words, under the Trump administration, there was a lot of controversy. Children were being separated from parents. Is that happening now or not happening?
No, that was a deliberate practice to deter families from reaching the southern border, was the separation of them. That was condemned across the board. Cruelty is not something that is an instrument of a value-based country. And we eliminated that practice. Actually, it was eliminated, in all fairness, towards the end of the Trump administration. We issued a policy preventing it, and we actually, the president created a family reunification task force that I chair that is actually reuniting separated families.
Okay, so President Trump campaigned, when he first campaigned for president, on creating a wall, and I guess some part of the wall was built. But would not a wall have helped somewhat if we had a big wall? Would that not block people from coming, even though people like to make fun of the wall and it's expensive? Wouldn't it not have had some impact on reducing illegal immigration?
So, look, in the 21st century, I wouldn't necessarily propose cementing bollards on the ground and constructing an immovable wall, given the dynamism and the rapid change in migratory patterns. But I just have to quote Secretary Napolitano. You build a 20-foot wall, they'll build a 21-foot ladder. And we see breaches of the wall all the time. We're seeing the corrosion and collapse of the wall.
In 10 minutes time now at the top of the hour, get the weekly US Baker Hughes rig count numbers. Oil rigs, the prior read was 496, total rigs prior 603.
Why would people come over the northern border? In other words, somehow come out, and nobody seems to be monitoring the Canadian border that much, I guess. So isn't it easier to come into the country illegally through Canada?
We monitor the northern border of the United States. U.S. Customs and Border Protection. Some of the terrain is very difficult to traverse. We have a different legal structure with Canada. We have a safe third country agreement with Canada, and the reality, and Canada also has different approaches to migration into their country than do some of the countries in Latin America.
If you wanted to come into this country illegally, let's suppose you want to come in.
Let's say if one wanted to come in.
If one wanted to, what would you recommend to that one person that they do about the best way to get into this country illegally?
I would caution them and encourage them to apply for a visa. And if, in fact, they seek humanitarian relief, to actually avail themselves of the lawful pathways that we have established so that they don't risk their lives in the hands of smugglers.
All right. What percentage of people die trying to get into this country? They're shot by somebody or something?
I don't know, David, a percentage, but I will share with you, having spoken to families who crossed the Darien, the area between Colombia and Panama, the suffering and the trauma is extraordinary.
So what is the country that is sending the most people illegally over the southern border? Is it Mexico, Colombia, Venezuela? Where are they mostly coming from?
It varies. It varies from time to time. I would just say that the population right now, demographically, the population of individuals whom we are encountering at the southern border, in between the ports of entry, predominantly right now Mexican.
Mexican, okay. So let's suppose the legislation that didn't pass, maybe eventually it'll pass, but until then, can you not administratively do things that was in the legislation, or are you already doing those things?
The legislation did a number of things. The two pillars were it gave us the legal tools, statutory tools, to vastly accelerate the adjudication of claims for humanitarian relief. And that means we could remove people more quickly who do not qualify. And quite frankly, we could give protection with finality to people who do, much more rapidly. And it resourced us to effect that dramatic change. We were talking about a piece of legislation that would equip us with 4,300 more asylum officers, more immigration judges, just plus up the entire system in a way that we now just don't have.
Okay. Let me ask you a few other questions related to this. So right now, the Department of Homeland Security was created after 9/11. Do you feel we are much safer today than we were before 9/11 because of the department?
I do. Much more.
And had a 9/11 event occur again, or?
It is our job, and not just the Department of Homeland Security, but the federal government, in partnership with state and local, tribal, territorial law enforcement, and the American citizenry, to be vigilant, because the threat landscape, as Director Wray of the FBI has accurately communicated publicly, we're in a heightened threat environment.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
Okay, but newspapers can disseminate this information. Why is it, if it's over social media, it's got to be banned? If a newspaper says the kind of same things that is over TikTok, it wouldn't be banned because of the First Amendment. Why is the First Amendment not protecting the TikTok social media devices?
Well, it's not to me an issue of the First Amendment. It's an issue of security. As we are talking about a company and an algorithm that is controlled by a foreign state that acts adversely to the interests of the United States, and we have an obligation to protect Americans.
But the presumption is that people aren't smart enough to know that it's disinformation and they can't make the decision for themselves. Is that right?
Well, we're talking about many, many young people that access TikTok. I would posit that in this country we don't have the level of digital literacy that I think we would all want. We're all vulnerable to disinformation, and the reality is that we have an obligation to safeguard against it. We're talking about the intentional dissemination of false information.
Okay, I should disclose that my firm is an investor in ByteDance, so I'm not personally an investor, but my firm did invest in it. So let me go on to another subject then. Okay, so what is...
You know, my answers would have stayed the same had I known that at the outset.
Okay, I didn't think you were going to change, but do you have children who ever watch TikTok, or you tell them not to do that?
You know, the one maxim from law school that I remember very clearly, I don't think our older daughter looks at TikTok, our younger daughter does. The law abhors a useless act. That is a maxim I remember. And so if I admonished our 19-year-old daughter to not access TikTok, I'm not sure I would succeed.
Okay. Do you ever watch TikTok yourself?
She is a digitally, no, I do not. She is a digitally literate consumer of information.
What is the biggest security threat to the United States right now, in your view?
So I would, in the terrorism context, I would say the threat of foreign terrorism has reemerged with a greater level of significance, and the threat of domestic violent extremists, individuals or loose affiliations of individuals who are radicalized to violence because of ideologies of hate, which are only increasing, especially after the October 7th terrorist attacks against Israel, anti-government sentiments, false narratives, other narratives propagated on.
But you feel better about our Homeland Security today than you did 10 years ago or 20 years ago? You think?
I do. I think the department and the Homeland Security enterprise writ large has matured and advanced tremendously.
And today, who are the best at cyber terrorism? Is it China, North Korea? Who do you think has the greatest capabilities of doing damage to our country in terms of foreign countries through cyber?
I would say there are four: China, Russia, Iran, and North Korea.
Okay, and in our country, you can go, if you're really good at cyber or something like that, you can go work for a venture firm, make lots of money, and so forth. If you go work
so we're shortly expecting the US Baker Hughes rig count numbers for the week.
Is the US government able to get really top-flight cyber people who can compete with the people from overseas, or do we not have the best people in our government working on these problems because we can't pay them enough?
We have the best people in the government, and there are the best people in the private sector as well. You raise an issue where we had a debate internally. To attract the best cyber talent, should we increase the salaries of those individuals? to be able to better compete. We, of course, cannot close the divide, but we could shrink it.
And how did
somewhat.
that come out?
And so I lost this debate because we did increase the salaries. And my position is very difficult for me to stand in front of a group of Border Patrol agents that risk their lives every day, and say, I've got to pay cyber talent, I've got to kick up their salary a little bit to come to work for the United States of America. Because I will tell you, the compensation in public service is different than a material compensation.
So
there is a sense of fulfillment, and there is a commitment to service.
Baker Hughes total rig count 604, 604. Oil rig count 497, 497.
So I disagreed with the plus up.
So it didn't get done?
Oh, no, it got done.
It got done. So now we're paying people 5% more?
We're paying people a little bit more. And you look, in AI talent.
Okay.
We have an AI recruiting effort underway, and I've hit the road in recruiting data scientists and the like. And I don't talk to them about the salary. I talk to them about what it means.
Well, are you using AI now already to kind of help?
We are, and our department is leading in the use of AI.
Can you give us any examples without violating national security about how AI is helping?
So let me share with you one example of how it has demonstrated its capacity for good as well as otherwise. And then I'll share with you a couple pilots that we have going on. We fight online child sexual exploitation and abuse. 80 million images disseminated worldwide last year. I don't think people understand the extent of the problem. We used AI to take a photograph of a young girl who disappeared at the age of about 7. And we used AI to extrapolate what that young girl would look like now, 10 years later. 10 years later. Our ability to make that extrapolation using AI was so effective that our law enforcement officers were able to identify that 17-year-old, find her, and rescue her. Remarkable.
Wow.
Let me flip it. We then see AI being used to generate an image of a child that doesn't exist or a child that does exist and depict that child, real or artificial, depict that child being sexually exploited. And it causes our law enforcement officers to devote resources on a decoy or errant mission. And so its potential for good and its potential for harm are real.
So can you tell what I'll look like in 5 or 10 years?
You will not have changed one bit.
Really? Wow. I like that artificial intelligence, right? So let's talk about your background. You don't come to the cabinet with this conventional background of many people who have this position. So where were you born?
I was born in Havana, Cuba.
Really? And at what age did you leave?
My parents brought my sister and me here to the United States as political refugees when I was about 1.
And did they come in legally or illegally?
They came in illegally. My father was a bit prescient, although we didn't leave early, but we left early enough.
So there isn't that big a Cuban, or wasn't that big a Cuban Jewish community, but your mother and father were both Jewish. Your father was Sephardic.
Yes.
And his ancestors came from?
His father was from Turkey, his mother from Poland.
And your mother was Ashkenazi Jewish?
My mother fled Romania to France to Cuba late. Her father lost 8 brothers and other family in the concentration camps. They left so late they couldn't get to Israel, and our policies at that time were not as welcoming as one would have hoped at a time of great human distress.
Okay, so they came to the United States legally. Where did they come?
So we arrived in Miami, and we lived in Miami until my father found a better work opportunity in Los Angeles, California.
You grew grown up in Los Angeles?
I grew up for most of my life in Los Angeles.
And you speak Spanish fluently?
I speak it. My grammar is not something that I take great pride in.
Okay. So where did you go to high school?
I went to Beverly Hills High School.
Beverly Hills High School, with a lot of movie stars, kids, and things like that?
You know, it's interesting that would you consider Jack Abramoff a movie star?
No.
I don't remember any movie stars. You know, when you hear, probably when everyone hears Beverly Hills High School, they think, you know, of the Clampett family. There were 4 elementary schools that fed into the high school. 2 tended to be of a more affluent community, and the other 2 were, quite frankly, modest. I grew up in a lower middle class to middle class home, never wanting for anything, an incredibly close family.
You have siblings?
I have 3 siblings.
And they're all alive?
They're all alive in Los Angeles, California.
And are they interested in Homeland Security or not so much?
They are probably recent devotees.
Okay. So where did you go to college?
I went to University of California at Berkeley.
Okay, that's a pretty good school. So how did you do there?
I did pretty well.
And did you say, I want to be a Homeland Security Secretary someday?
I don't think I've had that level of hubris.
According to the state, North Dakota produced 3.388 million barrels of gas
Catholic
in
school.
March.
You're Jewish, so they have a lot of people who are Jewish there, I presume, right?
It was a mixed student body.
Okay. All right. So you graduated from law school, and what did you do?
I went into a law firm. I wanted to go into public service. This country has given my family everything, and I very much wanted to give back. I wanted to go into public service, and I had my eyes on the United States Attorney's Office in Los Angeles. They required 3 years of experience, and so I gained 3 years of experience in a private law firm and then went into the U.S. Attorney's Office.
Okay, and you were a litigator?
I was a federal prosecutor.
No, in the practice of law.
A litigator, yeah.
So you went in as a federal prosecutor, and you were an assistant U.S. attorney in Los Angeles?
For 8.5 years, specializing in sophisticated fraud cases.
Did any of your people ever get off when you took them to trial, or they were, you convicted everybody?
One individual. We ended up resolving the case after a adverse verdict.
Oh, okay.
In a case that was quasi-criminal. One doesn't suffer an adverse verdict and get a chance to retry a case in the criminal, obviously double jeopardy. But this was a quasi-forfeiture case. In the first trial, the jury voted for the defendant. The judge actually issued a verdict, a ruling notwithstanding the verdict, felt that the jury had erred gravely. We took it to trial again.
Okay.
And
so you did pretty well. So you became the U.S. attorney.
Yeah, and let me share something with you. When I became the U.S. attorney,
at the age of 38.
Yes. Yeah. I think I might have been ultimately confirmed at 39. But when I was the U.S. attorney, I communicated to all of the supervisors in law enforcement that during my tenure, the acquittal rate would go up. And I received a standing ovation. And I'll share with you why. And Jamie knows this as the former Deputy Attorney General. Law enforcement will never take issue with an adverse verdict if one took a tough case to trial and one worked 100% and invested everything one could in reaching a just outcome. But what law enforcement will criticize is the prosecutor who's hesitant to take a tough case to trial, even though it's a just and righteous case. And sometimes you take tough cases and the jury does the right thing. And sometimes, they say when the play is cast in hell, the actors aren't angels. We have tough witnesses. They come with their own baggage. I could tell a story that will make everybody in this room quake about an acquittal. We had one case where the two defendants, one, the United States Marshals and the guards in the detention center The warden and the United States Marshal during trial communicated to me a deep concern if this individual was not convicted, because the guards and the marshals who have seen everything said that they, around this individual, they felt they were around what the warden said is Lucifer. There was something about this individual. That case rested on a very difficult witness who was a drug user and the like, and the jury just couldn't do it. And they just felt they couldn't rely on this one witness, not exclusively, but predominantly, in finding beyond a reasonable doubt. And that individual, who was accused of stealing drugs from drug dealers and gratuitously setting one of them on fire to their death and chopping the other one up gratuitously, that individual acquitted. Law enforcement, we took it to trial. I wasn't the trial lawyer, but we took it to trial. I was on that case intensely. They thanked us for doing everything that we could, just as that investigator had done everything he could.
But the person got off.
The person got off.
And what happened to the person?
Don't know. Don't know.
Maybe ran for Congress or something like that? No. No. So did you ever convict anybody that you thought shouldn't have been convicted?
Oh, my gosh. Absolutely not.
Everybody you put in jail?
Never. This is a matter of ethics.
Okay.
This is a matter of integrity. Never can one have a scintilla of doubt with respect to the guilt of the individual one's prosecuted.
All right, so you're U.S. attorney, and then you finish that and you go back to the practice of law?
Yes.
You went to O'Melveny?
O'Melveny and Myers in Los Angeles.
All right, so you got involved in did you get involved in the campaign when Barack Obama was running for president? Were you involved in his campaign anyway?
I was.
Okay, so you ultimately get involved in the transition with Barack Obama?
Yeah, I led the criminal division of the Department of Justice transition team.
And you took a position in the Obama administration initially. What was your position?
The position was the Director of U.S. Citizenship and Immigration Services, an agency within the department that administers the legal immigration system.
All right, and then after that, you got promoted to be the Deputy Homeland Security Secretary under Janet Napolitano?
Yes.
Okay, and so that didn't convince you that this is a complicated area and you shouldn't want to come back as Secretary, or that?
Complicated, difficult, challenging, and extraordinarily fulfilling.
All right. So you go back after the President Obama leaves office. You go back. You join
Wilmer Hale.
And you're in what city?
Here in Washington, D.C.
Okay. So you're a partner there. How did you get connected to the Biden administration? Did they remember you from the Obama administration, or?
They did.
They just called you up and said, guess what? We like you as deputy. Now you can be the secretary.
I wouldn't say it was in that way, but I was extraordinarily proud to be contacted by the incoming president, the president-elect, to be considered for the secretary.
And did your family say, you're making a lot of money here, you're way up here in compensation, and you're going to go down here again? And that was a factor?
No.
You didn't care? Okay.
Didn't care wouldn't be. It is what it is. What it is.
Okay. All right. So, what was your confirmation like? Was that unanimous, or?
Oh, I wouldn't say it was unanimous. I will tell you that I was confirmed unanimously twice until I touched immigration. I was confirmed unanimously to be the Director of U.S. Citizenship and Immigration Services. And after that, I did not enjoy two easy confirmation proceedings. My confirmation as a secretary was along party lines.
And when you do that, when you're confirmed...
Not entirely. There were a few Republicans in the United States Senate who voted to confirm me.
When you do
predominantly
that kind of confirmation, you have to pay yourself for the legal services or getting confirmed. Do you have to pay accounting fees, or how do you get confirmed without having to spend a lot of money on legal or accounting things to fill out forms?
By filling them out oneself.
Oh, okay. Save money that way. Okay.
Yeah, I didn't spend any money.
All right. So let's talk about the Department of Homeland Security. How many people work at the Department of Homeland Security?
About 260,000.
And are they
the third largest department in the federal government.
And are they working remotely?
Both, some remote and some in person, and our frontline personnel don't have the option of working remotely.
What are the main parts of it? I know you have certain parts that were put together out of Treasury Department, other things. What are your main divisions?
I don't think people really
Shortly expecting the results of the Fed Reverse Repo operation.
Of our remit, of our mission. In the immigration area and in others, U.S. Customs and Border Protection, why do I say others? Trade and travel, TSA, Immigration and Customs Enforcement, U.S. Citizenship and Immigration Services, Cybersecurity and Infrastructure Security Agency, FEMA, United States Secret Service. Those are 7, United States Coast Guard, the 8th. The expanse of our portfolio is extraordinary, from online child sexual exploitation and abuse, crimes of exploitation, human trafficking, to facilitating lawful trade and travel, to search and rescue and security in the Arctic and the Indo-Pacific, to addressing the flooding yesterday and today in Houston, Texas, where we have a number of fatalities, and the frequency and gravity of extreme weather events is only growing. The cyber attacks from China, Russia, Iran, North Korea. It's extraordinary.
Do you ever get a weekend off? You don't have to worry about some crisis somewhere?
I take, my goal is to take half a Saturday.
Half a Saturday. Okay, and how do you stay in shape? Are you a exerciser or a worrier?
That's you know, let me tell you, if worry sheds weight,
right,
I would disappear.
73 counterparties take $449.373 billion at the Fed Reverse Repo operation.
Giving you tips or something about some Homeland Security violation somewhere?
Do you mean, can I walk into a restaurant without someone commending us for the extraordinary work we do?
Does that happen a lot?
Keeping the American people safe and secure. I am approached from time to time and other times not.
What's the biggest complaint you get about TSA agents?
Let me say this. 10 years ago, the concern was, am I going to, 10 plus years ago, am I going to board my flight and reach my destination safely? That was the concern. Am I going to reach my destination safely? Now the concern is, how facile will my travel experience be? How long will I need to wait in line? We have moved a lot.
Okay, but sometimes people get through the TSA system, they get on the plane and they're drunk, or they hit a flight attendant, and then I never read about they're going to jail. They just seem to kind of go away. What are you doing about that?
David, I share your perspective. I remember as an assistant United States attorney, anyone messed around in a plane up in the air, they were prosecuted. It was a federal offense. The level of disruption in a post-COVID world is unprecedented in scope and scale, and I actually believe that the enforcement regime is not active enough.
Okay, so you share my view.
I do.
Okay, so if President Biden is reelected, would you continue to serve in this position?
I will tell you that I believe in the president, and I believe in his prerogative to decide who his cabinet
All right, if the president is not reelected, and your best friend and your worst enemy approached you, and they said they were offered the job, who would you recommend take it? Your best friend or your worst enemy?
Absolutely, I don't have enemies. I would absolutely ask my best friend to take the job, and if I had an enemy, I would consider them unqualified.
Okay, because of your enemy, right? Okay, so today, people are worried about immigrants coming in illegally. But how many illegal immigrants do you think we have in the country now? And once somebody is in the country illegally, what percentage actually ever gets sent out?
So we have, thus far, this fiscal year, removed or returned more individuals than any administration, I think, for at least 10 years. So we're removing and returning more people than any administration, including the immediately preceding administration. When we took office, I believe the accounting was approximately 11.4 million undocumented people in the United States. We don't have an update to that number now, but it's been millions and millions because our system has been broken for decades.
Now, are you responsible for overseeing domestic terrorism too, or dealing with that?
We deal with the domestic violent extremism, which is the form of domestic terrorism that we're most focused on. We deal with it. We deal with it with our partners across the federal enterprise, the FBI, intensely so.
So on the Secret Service, recently I think a candidate running for president, Robert Kennedy's father, was assassinated. They didn't have Secret Service protection then. He's asked for Secret Service protection, hasn't received it. Who makes the decision on who gets Secret Service protection when you're running for president?
I do. And what we do is we have set up a process. We have defined criteria, and the process provides for a bipartisan group of congressional leaders to make recommendations to me after they have analyzed the factors that we have established. This is a protocol that was established prior to the Trump administration, and so we resuscitated it. It is apolitical, it is bipartisan, and the factors are apolitical, and I have followed in each instance the recommendation of the bipartisan group. There has been no light between or amongst us.
Well, when I worked in the White House 100 years ago or so, it was a president and the vice president got Secret Service protection.
As they do now.
But it seems as if a lot of White House aides and other people have Secret Service protection. It seems like it's proliferated. I mean, how do you decide who gets it if you're a White House aide or not?
It is based on a threat assessment, and very sadly, the threat environment in which we are living is more acute than it was when you had the privilege of serving. Look, we are now in a world where a former government official, not of course the former president, but a former government official is receiving protection because of the threat landscape.
What about baseball owners? Do they need Secret Service protection? You ever thought about that?
You know, if I recall my reading of the standings circa this morning, you are safe and secure since you're resting in first place.
Yes, I hope so. But what happens goes south? We'll see. Okay.
So we'll talk again, either before or after we talk about TikTok.
Okay. So on the whole, people who are watching this, you would like to say to them that they are safer today in the United States than they were 10 or 20 or 30 years ago, but we still have big risks.
I would say the following. I would say we are safer today than we were yesterday. The threat landscape is heightened, and everyone needs to be vigilant. Because what we have observed, if one takes a look at the domestic violence that has occurred, whether it is the tragic shooting in Buffalo, New York, in the supermarket, whether it is the July 4th parade in a suburb of Chicago, whether it is Uvalde, Texas, what we have learned is that the individuals, the assailants, were exhibiting signs of radicalization to violence before they committed their heinous acts. And what we, the See Something, Say Something campaign that Secretary Napolitano developed, really, I think, to the general public, speaks of the abandoned backpack at a bus stop or in the airport. It doesn't necessarily speak to the individual who is exhibiting signs that should cause us all to worry. And so the question is, and what we are building, is an architecture where people understand what the indicia are and know that what help they can call. Because it's not to call the accountability regime, law enforcement, because nothing has occurred yet, but to call a trusted source, whether it is a teacher, a faith leader, a mental health practitioner, to say, look, this individual is coming to school in a hazmat suit, or this individual has withdrawn from all social interaction and is communicating messages that speak of an interest in committing a violent act. Who do I call? What outreach do I make to prevent something from materializing?
Now, sometimes when you see people who do these mass shootings, they go onto their social media and they say, oh, they said some crazy things 2 days ago or so forth. But you don't have the resource or capability to look at all crazy things on social media to figure out who's might going to do something crazy, right?
That is correct. But if they are publishing that in a so that others can see it, what do others do? And that's the muscle that we need to build in this country. How to come to help someone and prevent something from happening. So I would say we're safer, the threat landscape is heightened, and everyone needs to be vigilant. Homeland Security is an all-in proposition.
Right. Suppose a member of Congress calls you and says, I have a security problem in my district, and I'd like you to look into it, and there's a challenge. This person voted to impeach you. What would be your reaction?
The political position of an individual is irrelevant to a security analysis.
So it doesn't affect you? Okay.
Not in the least.
You don't remember the names of the people that voted against you, I guess, right?
I don't have that good a memory.
Right.
Let me be clear that I have some very productive relationships and good relationships with some of the people who voted to impeach me.
But you don't hold it against them?
You know what? I'm not a person that holds things against people. I live my life to the best of my abilities in a way that would make me, my parents, and others proud, and then others are going to live their lives and make their decisions.
Now, the first Homeland Security Secretary was a big, burly man, former governor of Pennsylvania. You're not
a great man.
You're not a big, burly man, so you're shorter, I've noticed, than me, even. So when people see you and they meet
very interested to see where this is going.
So when people meet you for the first time and they say, I thought a guy was going to be big, he's in charge of Homeland Security, but he's diminutive. Is that, no? That's not been a problem?
Not for me, but let me, so I have to share a story with you. But before I do, you mentioned Secretary Ridge, a great American. When his portrait was unveiled at the then headquarters, he said, this is very, very typical of Washington. First, they paint you in a corner, then they frame you, then they hang you out to dry. So I was, as a new assistant United States attorney, I was dealing with a defense lawyer, and he had not met me. And he apparently gathered from my voice that I was tall and big. And so when he first met me in court at a status hearing, he actually thought I was an imposter. He did not believe I was who I was. But then when the judge called the case, he realized I actually was Alejandro Mayorkas. He literally did not think I was who I presented myself to be. The judge had not met me before. The defense lawyer was about 6'5", and I am almost the inverse, a little taller than that. And the judge looked at me and looked at him and said, you know, Mayorkas, you should be really happy we don't settle this case the old-fashioned way.
So to be very serious, I really want to thank you for your service to the country in many different positions. I would not be as magnanimous as you if people were voting to impeach me. I probably would have their names memorized. But thank you for what you've done for the country, and thanks for being a very good sport today, okay?
Thank you for having me.
Thank you.
Thank you, David.
Thank you. I have a gift for you. Okay.
That was Bloomberg Television's peer-to-peer host David Rubenstein sitting down at the Economic Club of Washington with Homeland Security Secretary Alejandro Mayorkas for a wide-ranging conversation here on Bloomberg Television and Radio. I'm Kaylee Lyons in Washington alongside Joe Matthew as we bring you Balance of Power, a topic that comes up frequently on this program, Joe, is of course the border, which is the purview of the Secretary. A wide-ranging conversation there that included things like TikTok, other terror threats facing the United States right now, but much of it focused on what exactly is happening over the border. The Secretary admitting over the course of this administration, several million people have migrated across, but he did make the point that more have been moved or returned than any prior administration, including the one immediately preceding this one.
Yeah, it was a newsy conversation, and it was just a different look at a secretary we tend not to see in that type of setting, Kaylee. Usually when we talk about Alejandro Mayorkas, he's being browbeaten by lawmakers in a hearing. That's the extent to which most Americans know his personality. Jordan Fabian might be an exception. He covers the White House for us here at Bloomberg, and he joins us at the table. An hour-long conversation, Jordan. Thanks for coming in. Really kind of interesting not only to hear the news, but hear from the man described as diminutive a moment ago by David Rubenstein. But he seemed to have a sense of humor and an affable approach to even the hardest questions.
Yeah, he is a personable guy. I've covered him dating back to the Obama administration when he was in charge of USCIS. And so he's been at this a long time. I think he understands the dynamics here in Washington, how this issue has become super polarized and how he's become sort of a whipping boy for the situation and seems to be have developed a thin skin over his years in Washington.
Well, one of the very first questions that David Rubenstein asked him was, what did it feel like to be impeached by the House? Because that happened in the not so distant past. But of course, there also was a lot of question in there about what he is able to do administratively without getting the go-ahead from Congress, who took that action against him, at least the House did. They talked about that legislation, the deal that was reached between the White House and the Senate that died a very quick death. In fact, it was 100 days ago today that that deal was killed. What are we expecting to see either from DHS or from the White House in terms of executive orders in border policy as we move forward in this election cycle?
So we've already seen a couple of smaller orders, and a lot of people think that this is the prelude to a larger order, something that would, effectively allow President Biden to do what that law was authorizing him to do, which was to shut down the border if crossings get to a certain number per day, per week, per month. And so this has been under consideration for a long time. The big question is, does the president have the legal authority to do this on his own? This is a question that has dogged multiple presidents now. How much could they do on their own to address border policy? And so the holdback for the administration has been, if we do this, we might just get sued and this might not even happen. And so that's why they were pushing so hard for legislation. Now that that's dead, they seem to have turned their attention back to the executive order. We don't really have a sense of timing, but I would expect it to happen some point in the next few weeks.
Chuck Schumer says he wants to bring this bill to the floor of the Senate, get this thing going all over again, the compromise bill that Kaylee references that would have that automatic shut-off, I guess, that you're describing after 4,000 or 5,000 crossings. Joe Biden was criticized for not leaning into that and letting negotiators do their work. If this really happens, does the White House re-engage?
Well, I mean, I think they've been fairly engaged. And honestly,
in terms of selling the bill.
Oh, in terms of selling the bill. Yeah, look, I mean, I think they've been talking about it a lot. And, Biden himself went down to the border right after it got killed to sort of make a point to say, hey, I was for this. Republicans, spurred on by Donald Trump, ended up killing it, and I'm going to keep talking about this. We haven't heard him, regularly talk about it, but I would imagine if Chuck Schumer's bringing it to the floor, they know it's not going to pass. This is to get Republicans on the record saying, I don't want this bill to happen, even though I want more border security.
As a standalone.
Yeah, it's a messaging move before an election. This is not something that's going to necessarily pass. The political dynamics haven't changed, and this is Democrats. One example of them trying to put Republicans Republicans on the defensive on this issue because Democrats themselves have been really put in a box here.
All right, Bloomberg's Jordan Fabian, White House correspondent for us. Thank you so much. And of course, there's the question of whether this bill could reach the Senate floor, but a lot of people in the House will tell you, Joe, the Senate should instead put up H.R. 2 for a vote, which passed on party lines in the House months ago.
No, we never get that answer on this program. A lot more to follow here. We're going to talk about the appropriations process coming up with Jack Fitzpatrick at Bloomberg Government, and Congressman Wiley Nickel will join us right here, only on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint
is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are set for the longest weekly win since February, 4 in a row. Today, the S&P 500 index continues to push higher. Little changed, up just 1 point right now. The Dow up 85, up 0.2%. We've got NASDAQ lower by 13 points, a drop there of just under 0.1%. 10-year 4.42% with a 2-year 4.82%. Spot gold today climbing by 1.5%. $24.12 for an ounce of the precious metal. Again, worth repeating, $24.12 on gold. We've got West Texas Intermediate crude up 0.8%, while Bitcoin up 2.5%, 66,897 on Bitcoin. Meme stocks moving lower again today. GameStop down another 25.6%, third day of declines. AMC Entertainment shares also moving lower. AMC right now down by 2.5%. Again, recapping, stocks higher. S&P on track for 4 weekly wins in a row. S&P right now up by 1 point. Balance of power continues. Back we go to Washington. And once again, your hosts. Here they are, Kaylee Lyons and Joe Matthew.
Charlie Pellet, thank you, and good to see you following our extended interview with Alejandro Mayorkas, a fascinating conversation that David Rubenstein brought us today as part of our Balance of Power, the Friday edition on Bloomberg TV and radio. I'm Joe Matthew, indeed, alongside Kaylee Lyons here in Washington, D.C. And Kaylee, we are coming off of a wild episode in the U.S. House that some are describing as a new low. Speaker Mike Johnson already had his hands full. This is an oversight hearing. And when we think oversight committee, you and I have talked a lot about the membership on that committee, Marjorie Taylor Greene, Alexandria Ocasio-Cortez. I don't think I need to say any more if you watch the video here. This was pretty ugly stuff. An argument broke out, got super personal. Speaker Johnson says the hearing was not a good look for Congress. We've got to take the emotion out of these things and deal with the issues on their substance. I think we may, however, be far beyond removing emotion from politics right now in Washington.
Yeah, it's fair to say. This was, of course, a late-night hearing. It started with a comment from Marjorie Taylor Greene on another member of the committee's appearance. It kind of all devolved into chaos from there. The chairman, Jim Comer, had difficulty getting things back on track, but in some sense, it just underscores the difficulty with decorum we have seen in the House of Representatives.
And what can be a dysfunctional body when it comes to lawmaking. If you can't even get people to treat each other with respect, how are you going to compromise on lawmaking?
Fair enough. Although some lawmaking is still happening. In fact, just yesterday, a bill that had passed in the House passed in the Senate related to how the SEC makes rules for accounting for cryptocurrencies.
That's right.
On banks' balance sheets. Essentially, it was a rule that makes it a lot harder and more expensive to be a custodian of crypto. It passed the Senate with a bipartisan vote, more than 60 votes. It has been, though, promised a veto from the White House, but it raises this wider question of the fate of legislation that the House is going to be voting on next week. Crypto market structure is going to be up for a vote, and I'm pleased to say joining us now is Congressman Wiley Nickel, a Democrat from North Carolina who serves on the House Financial Services Committee. Congressman, great to have you here on Balance of Power. Welcome to Bloomberg Television and Radio. I know that you have focused a great deal on crypto throughout your tenure in the House thus far. How confident are you that this bill is going to pass a full floor vote after it made it out of committee?
Well, first of all, I just want to say how glad I am that you're not asking me about Marjorie Taylor Greene and the Oversight Committee. Thank you for that. I am excited to talk about policy and the bipartisan work we're doing in Congress to get things done. And, if you're looking for good examples of bipartisan cooperation, our work in the House Financial Services Committee on digital assets is just that. This bill, the Fit for the 21st Century Act, the first ever, regulatory structure for digital assets is coming to the floor for a vote next week. I was part of a group of 6 Democrats who worked with my Republican colleagues in committee to move this bill. Similar group of Democrats in the Ag Committee as well. So we're going to get a vote next week. I'm very excited because we are operating on a 100-year-old securities law for this industry, and we need to get regulations in place. We need to protect consumers, and that's what this bill does.
Congressman, it's good to have you back. We haven't asked you about Marjorie Taylor Greene yet, but as far as crypto is concerned, what does the White House not understand on this legislation?
You know, I think the White House had a great executive order on Web3. I think, you know, Gary Gensler and the SEC are really at odds with a lot of others in the administration. So I've been very frustrated with Gary Gensler and the SEC's regulation by enforcement and frankly just open hostility towards crypto. So we're seeing that play out. I was part of a group of 21 Democrats who voted for the SAB 121 CRA on the House floor last week. But just yesterday, we saw 12 Senate Democrats agreeing with us that the SEC is way out of line and out of step, including Senator Schumer as part of that group of 12 Democrats. So I think that's a great message. And my hope is that Gary Gensler will see the writing on the wall and rescind SAB 121. He has the ability to do that. And really what he's doing is making, you know, putting the president in a very difficult position, forcing him to choose sides. He is not serving President Biden's best interest. So what he can do is he can withdraw it and work on the custodial banking piece, which is really the big policy point here that we want to get right so that, you know, we have, you know, Bitcoin ETFs. We want our U.S. highly regulated banks to be able to custody those assets, and he's prohibiting them from doing that.
Well, Congressman, you were there speaking of the 12 Democrats in the Senate who decided to vote in favor of this legislation yesterday. And I wonder what your message is as a Democrat who is not running for re-election to those that are, and how they should be considering crypto in their policy, considering, say, the chair of the Senate Banking Committee, Sherrod Brown, is very vulnerable in Ohio. He's running against a pro-crypto advocate in Bernie Moreno. There is tens of millions of dollars in crypto super PAC money that could be mobilized against candidates like him. Is it a mistake for incumbent Democrats not to be pro-crypto right now?
I think it's a partisan issue. 20% of registered voters own crypto. You know, this industry is not going away. And the message I have is whether you love crypto or you hate crypto, you should want to have regulations. That's our message as Democrats. That's what the work I'm doing in a bipartisan way does. We provide regulations for this industry, and what I don't want to see is this become a partisan political issue, because Web3 should not be at all.
Congressman, I'm not going to ask you about Marjorie Taylor Greene specifically, but when we look at the whole story here and what's been happening in the House of Representatives, the breakdown in decorum, the dysfunction that so many people talk about, people should know that you're a freshman congressman who's in fact in his senior term. You're leaving the House, and we can get into the reasons why, but I wonder if A, you're happy to be leaving because of the environment that you're surrounded in, the workplace culture, if we can call it that, in the U.S. House. And B, if you're on your way out of this body right now, you can do anything you want. Are you doing the risky business dance in the rotunda? Like, what do you do when you have free reign on your way out the door?
Well, you know, I am not retiring voluntarily. My district got gerrymandered away from me. I love this job. I have a lot more work I want to get done. So we're working twice as hard to get things done while I'm still in Congress. There's future elections for me. But the point that I think is really important for anybody watching, the chaos and confusion that we see playing out in Congress, there is one thing to blame, and you can put your finger right on it, and it's clear as day. It's extreme partisan gerrymandering. I got elected to Congress in a Republican seat. It was a slightly Republican seat. Could have gone either way. I won by 3 points because pro-democracy Republicans made their voices heard, and voters had a real choice. And gerrymandering is wrecking Congress. Less than 10% of the seats are competitive. The other 90% are only going to go to whoever wins the Democratic primary or the Republican primary. That's how members of Congress are designed right now, is they are just mainly here to win their Democratic primary, win their Republican primary. That's why you see all these food fights and the crazy stuff you see in oversight, because that's their focus. Less than 10% are truly competitive. We won one of those. So the answer is nonpartisan, independent redistricting. That would totally change the face of Congress. Congress, you would get so many more people who are just focused on getting things done and working across the aisle. That's what we need a lot more of, and we're going to have fewer and fewer seats that are like that. We're losing mine. That's one example, and it's the thing that we got to change if we want to get sanity back in Congress.
Were you going to go on the road with Dead and Company now that you have the time on your hands? I remember distinctly the tribute you made to the Grateful Dead on the floor of the House about 1 year ago. You can own it now, Congressman.
No, 1,000%. You know, I saw you two at the Sphere. I know Dead and Company is going to be at the Sphere. I hope I can get out there to see them. I know Jay Powell is definitely a fan and has not had his last Dead and Company show as well.
All right, well, we'll look for you on the vacuum cleaner during the Space Jam at the Sphere. Congressman, it's great to have you back with us here on Balance of Power. Wiley Nickel, the Democrat, North Carolina's 13th district, and that's the whole point there. Actually, really interesting point he made, Kayleigh, on how partisan gerrymandering leads to more dysfunction like we saw last evening in Congress. You know, Jack Fitzpatrick has to bear through this every day up there in person.
He does. The dysfunction and whether or not it leads ultimately to real legislating, which has been harder to come by in this Congress. It has been historically unproductive, but theoretically there is still more work that they could do through the remainder of this year, specifically before September 30th, when we're going to have the whole spending fight over again. And
do you think we'll actually do a budget this time?
Well, let's be honest, probably not. But Tom Cole, the chair of the Appropriations Committee, is at least setting out some numbers overnight.
Yeah, and Jack has this, of course, that's Jack Fitzpatrick's beat, appropriations at Bloomberg Government, and I believe he's with us right now. Jack, are we really going to have a regular order budget process going into the next fiscal year with an election underway, or am I just making you laugh?
They are going to try to get started. How far they make it through the process is another question. I would say that Tom Cole, the new appropriations chair, even as he put out a markup schedule and said, here's what we're going to spend on each of the 12 bills, acknowledged he would be, in his words, shocked if they got everything done by September 30th. Even if the House is productive, the Senate tends to move slowly. It's an election year. They still haven't agreed in a broad way on how much money they want to spend overall on defense and non-defense. So this puts a lot of pressure on the lame duck. The expectation is you try to make as much progress as you can, and then basically whoever has a better day on election day can decide, do we want to have a quick compromise in the lame duck, or do we want to drag this out into 2025 and try to use more votes that we're getting in the next Congress to get a better deal. So there's going to be a lot of pressure on the lame duck and some soul searching from whoever wins and whoever loses in terms of getting a final vote. And in the meantime, they're going to try to make some progress, but it's an uphill battle this year.
Well, as you talk, Jack, about the kind of differences in opinion over defense versus non-defense spending, it's worth pointing out that in the top-line figures that were released by Chairman Cole yesterday, the bills would follow spending caps set in the 2023 debt limit law that equate to 1% increase for defense spending, a 6% cut for non-defense funds. We're still talking about that debt limit deal that then nobody wanted to follow, and then everybody ultimately basically ended up following anyway when things were all said and done. Are we relitigating this over again?
Yeah, yes, they are continuously relitigating the 2023 debt limit deal, which is almost funny at this point because the debt limit suspension lifts in January. So by the time they're done arguing over the 2023 deal, they'll have to start negotiating another one to avoid a default. There was the deal that was written into the law that allows for a bigger increase for defense and cuts to non-defense. But then you may remember there was a side deal between Democratic leadership and Kevin McCarthy, who's no longer Speaker, to allow more, to basically keep it even. The idea, the handshake deal was just a 1% increase for both defense and non-defense, so parity between the two. House Republicans are saying, well, that wasn't written into the law specifically, so we're not doing it, and we're cutting more money from non-defense. There's not a lot of middle ground here. There's not a lot of meeting in the middle between Republicans and Democrats, and that fight is going to have to play out for probably a number of months before there's a reckoning, again, probably in the lame duck.
Jack, I've got to ask you about this meltdown on the Oversight Committee hearing that we saw last night. We were talking about it with the congressman before you joined. I'm not going to quote what was said. Marjorie Taylor Greene instigated this. We had two members of Congress yelling at each other, criticizing their personal appearances, and things got pretty ugly here to the point where the speaker had to issue a statement. If this happened under prior speakers, Nancy Pelosi, maybe John Boehner, wouldn't these people be brought into the speaker's office and reprimanded? What's going to happen here?
Maybe, maybe not. You know, you look specifically at the Marjorie Taylor Greene story. When she was first elected, she had made a number of comments that led to a fight over whether she would serve on committees. She is now on a committee. She kind of allied herself to some extent with Kevin McCarthy, not necessarily tied closely to leadership, but it's a bit of a sign of the times that even when there is a push to keep members off of committees for one reason or another, those pushes don't always succeed. And in a very, very narrow majority that Republicans have in the House, even if they feel one of their members is doing something inappropriate, they may rely on their votes and may have to work with them, not indefinitely, as we saw with George Santos, but sometimes for a long time. So there are a lot of factors that play into that, and Marjorie Taylor Greene seems to almost be at the top of the list of members who have tested the limits of leadership's patience.
All right, Jack Fitzpatrick, congressional reporter for Bloomberg Government, always covering the chaos for us. Thank you so much. And Joe, it is pretty remarkable to see the scenes of last night, the responses and the ongoing dialogue today. It's even pitting some Democrats against each other. The Democratic senator from Pennsylvania, John Fetterman, basically was comparing it to the Jerry Springer show, and Alexandria Ocasio-Cortez was not a fan of that comparison.
Well, and he was making apologies to the Jerry Springer show, to be more specific. We're going to talk more about this with our panel coming up in the late edition of Balance of Power at 5 p.m. Washington time. First, it's Bloomberg Business Week, right here on Bloomberg TV and radio.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
From the beating heart of global finance, economics, and politics,
and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
What a very good afternoon, everybody. It is Bloomberg Business Week. I'm Tim Stenevec. Carol Masser is off today. In her place, we have Shonali Bassick. She is Chief Global Financial Correspondent for Bloomberg News here in the Bloomberg studio. Shonali, good afternoon. How are you?
How are you, Tim?
Doing pretty well.
We have a lot going on today and a lot going on this week.
That's right.
First thing we're looking at, though, is stocks really hovering at records. Remember, we crossed that Dow 40,000 mark earlier this week, and now we are still looking at some exuberance, some fear under the surface, too. We're going to be joined a little later by Bloomberg's chief equity strategist to tell us what we need to know about this rally and how durable it is.
Also, it's not just stocks that are doing well. The past 3 years have been the best time to find work since the 1960s. The U.S. is also doing better than the EU, the UK, and Japan when it comes to growth. So why is President Biden getting hit when it comes to the polls? We've got our Bloomberg News Real Economy reporter with all the data joining us a little bit later.
And speaking of politics, there is one man in the eyes of Donald Trump, and he is a money machine. John Paulson is somebody that a lot of people have been talking about his future in a potential Trump administration, potentially Treasury Secretary. But there's another man, not known as a money machine, but known as Scott. Who's that Scott? He's Scott Bessent. We're going to talk about who he is. He was a former portfolio manager at Soros and why he is kind of perking up here in the ears of Trump administration, potential administration officials.
That Soros connection is so interesting, given that George Soros is sort of this boogeyman when it comes to many in the GOP. And finally, we're going to have Options Insight with Abigail Doolittle. She's talking meme stocks in the next week's NVIDIA earnings. All that and more over the next hour. First, though, a check of the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much. NVIDIA shares, they are trading lower right now. We've got NVIDIA down 1.6%. Briefly on those meme stocks right now, both lower. We have got shares of GameStop down 23% and AMC lower by 4.5%. The Dow, the S&P, NASDAQ, all mixed right now. 1 point drop, little change on the S&P, 52.95, down less than 0.1%. Dow Industrials up 62, gain there of 0.2%. NASDAQ lower by 32, a drop of 0.2%. 10-year, 4.41% with that 2-year, 4.82%. Spot gold pushing higher now. We've got gold up 1.6%, 24.13 the ounce on the precious metal. Crude up 0.9%, 79.95 on WTI. Reddit shares, they are surging now by 11.5%. Reddit is in a partnership with OpenAI that will bring its content to the chatbot ChatGPT and other products, while also helping the social media company add new AI features to its forums. Again, recapping, looking at a mixed Friday here, on track for a winning week, 4 in a row. S&P right now down 2 points, little change there, down less than 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. It is a mixed Friday, but fair to say stocks are wavering near record highs. This after a rally that put the market on track for its longest streak of weekly gains going all the way back to February. It does follow a set of inflation reports that kind of rekindled hopes that the Fed would be cutting rates this year. The S&P 500 heading toward its 4th week in a row of gains. The move higher has lost some steam in the past couple of days, though the market is still on pace for its best month so far this year. Someone who I know is not surprised at all by this rally is Bloomberg Intelligence Chief Equity Strategist, Gina Martin-Adams. Gina, good to have you with us this afternoon. What does your research tell you about the sustainability of the rally that we've seen, not just in the last 4 weeks, but really since October?
Yeah, it's a great question. Thanks for having me, Tim. I do think that when we look at the broader sort of subset of indicators that really are meaningful for determining direction of the S&P 500, we look at 17 of these indicators in our market health checklist. And that checklist has really just persistently gotten more and more supportive of gains, whether it be from technicals or earnings or even the macro indicators, as you alluded to with inflation, but also even with the growth indicators from the macro. We've seen just persistently stronger supports for the equity market emerging, not just over the last 6 months, but really over the last 18 months from the lows of October of 2022. The only thing that wobbled a little bit was coming into the second quarter. We did get some technical cues suggesting that we were due for a period of chop. That period of chop lasted, a sum total of a month before stocks started to recover again. But nonetheless, that was really the only negative indicator. Everything else seems to be pretty positive.
Speaking of positivity, Gina, we also had, of course, Walmart results this week already. And when we look ahead next week, we have another set of retailers starting to come to the market here with their first quarter results. And you looked at the consumer kind of holding up in the Walmart results, but you also had mostly the wealthier consumer holding up there. Yeah. Do you expect that consumer fear is waning, or do you think next week brings a new set of troubles?
Well, I think this is a really, really intuitive question, Sonali, because one of the things that we're finding is a bit of a distinction in what is priced in the market versus what's happening in the macro. I do think that realistically what you want to do when you're assessing the value of any equities is determine what is priced in. And what we actually see is increasingly in consumer discretionary stocks at large, but also even in consumer staple stocks, generally valuations are extremely depressed relative to other sectors, relative to long-term averages. This would imply that a weak consumer is already priced. So any sort of even moderate upside surprise or confirmation that the consumer is not sort of caving into the pressures of the macro, higher interest rates and the like, would generally be pretty supportive. And I think this is an important clarification to make is the consumer may, not hold in terribly well, but that's already kind of anticipated by consumer stocks to a great degree. If the consumer clearly just totally falls through the floor, stops spending, really capitulates to the pressures, I don't think that's necessarily priced, but certainly not a strong consumer or even a steady consumer appears to be anticipated by the equity market right now.
Gina, you mentioned the choppiness that we saw back in April, and I'm wondering if the choppiness is totally behind us at this point.
Yeah. It does feel that way, certainly, with the equity market in particular, the large cap market making new highs, with the small cap index even starting to break former resistance barriers. It does appear that our corrective process is in the rear view. Now, This is a tough call, though, at this point in the cycle, because typically the earnings season itself is what creates a degree of optimism. And we're kind of tailing off on earnings season. As you noted, we've got some retailers, we've got NVIDIA left, but not a whole lot else to really support the equity market and give that confirmation of steady earnings growth going forward. So we go into this vacuum period, and usually the period after earnings season or between earnings seasons becomes a potential volatility period for stocks because we're more dependent upon macro news in the absence of earnings news. So you do anticipate, the price trend would say that things are certainly clearing through. We've cleared the hurdles presented by technicals at the latter part of March and early April. But the fundamentals, we're not going to get those stories every day. We're not going to get the company confirmations every day that things are fine. So we become somewhat dependent upon the news flow, somewhat dependent upon what the Fed says, policy making at large, as well as the economic data, which may present some volatility for stocks in the next 6 weeks or so.
Well, that's exactly where I want to go, Gina, the volatility as a result of economic data. In one of your recent notes, you and the team wrote about the increased importance on inflation data that we get in a high inflation environment. And I was struck earlier this week when we got the CPI data. Remember, this is not the Fed's preferred measure of inflation. It's it's not CPI, it's PCE. Right. But in a period of high inflation, as you and the team write, this data take on a more significant role.
Yeah. Inflation data in particular takes on a more significant role. I think we cover very clearly the aspect of the way that inflation can manifest itself in the equity market through the Fed, right? Obviously, faster or higher than anticipated inflation does change potential Fed outcomes, the change in interest rates can manifest itself in valuations in the equity market. What I think is less clearly defined or clearly talked about and should be is the fact that inflation itself can be really meaningful as a driver of margins for corporations, which ultimately becomes a big component of the earnings outlook. And right now, we're watching really carefully the spread between consumer prices and producer prices as an indicator of that margin outlook. That spread is still very positive, but producer prices are accelerating a bit, even as CPI or consumer prices have stalled. If we're moving into an environment where the difference between consumer prices and producer prices goes from positive to negative, or producer prices really gather momentum while consumer prices have stalled, that could create trouble for the margin outlook. And that's something that I don't think a lot of people are talking about. It's something that's been a huge tailwind for stocks over the last 18 months or so. We need to see that tailwind sustain, or we could be in for a rockier period of profitability going into 2025. It's definitely something we're watching.
I'm glad you brought that up too, because we had an interview earlier this week with David Kostin over at Goldman Sachs, and part of the reason he thinks that the S&P is going nowhere is because his EPS estimates for the rest of this year are below what consensus is expecting in terms of growth. How much risk is there to growth expectations, even just this year, let alone next?
Yeah. I don't agree that there's a ton of risk in consensus expectations. I think actually the consensus is probably a little too light on the potential for growth through the remainder of 2024. This is a lesson we've learned the hard way over the course of the last 4 quarters, is an overdependence upon macro inputs to drive your forecast at this stage in the cycle proves a bit insufficient. And most of that is because of the margin recovery that tends to emerge after major recessions and earnings. We are in that period of margin recovery right now, recovering from an earnings recession that results in much more robust gains than most of the consensus expectations historically, as well as any macro implied forecast for earnings growth. We've also seen for several consecutive quarters now, consensus has just been far too pessimistic on the outlook. And I think that that reflects this really uncertain macro climate, the uncertainty with respect to higher interest rates, and when that will ultimately come back to really suppress growth has created this environment of underestimation. So I actually disagree. I don't think the consensus is too optimistic based upon our modeling. Certainly the macro has been too pessimistic, and that has suppressed expectations. It remains to be seen where we go. But I proven to be an insufficient indicator, frankly, of what to expect from earnings, and I want to respect that.
Well, wherever we do go, Gina, we know you will be there giving us the details. Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence, joining us this afternoon from New Jersey. Well, speaking of financial markets, one person who certainly has the power to influence financial markets is the Treasury Secretary, which brings us to our next story. It's one of today's most read on the Bloomberg terminal. It's about 2 men. One of them, in the eyes of Donald Trump, is a, quote, money machine. The other is a guy named Scott. Each of them, if November's election breaks the ex-president's way, could be America's next Treasury Secretary. So let's get to the interview with Kathy Burton, Bloomberg News hedge fund reporter. She's here in the Bloomberg studio. So Kathy, 2 men, both familiar names, I think, to the Bloomberg audience, John Paulson, Scott Bessent. Give us a refresh, though, on each of them.
Well, John Paulson is famously known for making a lot of money during the financial crisis. He shorted subprime bonds and made $15 billion for himself and his clients. He lost a lot of it since then. And Scott is a former Soros Fund Management employee, later the CIO. And now he runs his own macro hedge fund.
I think, first of all, the lead of this story is brilliant, right? And it also speaks to, John Paulson is kind of widely known at this point because of that 2008 moment, but Scott Bessent, maybe the American public knows a lot less of. And so how much does Trump actually know him? And how is he kind of getting introduced to the circle here at this point in time?
Well, I think Trump is certainly aware of John Paulson because, as you say, he's a big name. And also, he has done business with Trump, sold him a place in Florida, a golf course in Florida, and also held a lot of money raisers this year, including one that came right after the Democrats had their big one in New York, and they raised something like $50 million. So definitely gets attention.
So how's Scott Bessent then getting on his radar now?
Well, he's also been a big donor. Personally, he's also held fundraisers. And in addition, he's been sort of acting as a economic spokesperson for Trump's campaign. He's been on all sorts of TV, radio, podcasts, Fox News, and all those interviews are up on Truth Social, so you know that Trump sees them.
Well, so interestingly here, too, when you look at Scott Bessent, Treasury Secretary, on one hand, you want somebody who is strong in regulation and who can deal with things like sanctions, but there is a sense here from the Wall Street perspective, right, that somebody close to the markets would be a good thing, at least from the eyes of investors. What's Scott Bessent's track record as an investor?
It's been good. I mean, especially during his days at Soros, he was very much part of the breaking the Bank of England, the bet that they made $1 billion on in the 90s. He's made a bunch of money in Japan, long and short the yen, over the years in like the 2012 and after period. So he's had success, and he definitely knows world markets in a way that John Paulson doesn't, which has people have said that about him in the Trump camp.
One name that hasn't come up in our conversation thus far is Steve Mnuchin, who was actually a rare constant in the first Trump administration, up to now the only Trump administration. Is there a chance that he could take the role again as Treasury Secretary?
I think there is a chance. It's unclear to us if he would want that job again, but definitely he has a very good reputation in the market of doing a good job, and I think that people who like Scott say that he would be similar to that.
What about potentially is out there that could prevent Paulson from actually taking the job here? Yes, he's done fundraisers. Yes, he's been an outspoken proponent of President Trump. But are there some elements that might prevent him from actually taking the job if he were offered?
Absolutely. He has a lot of investments, which he would have to sell. And it's unclear whether he still has a big position in Fannie Mae and Freddie Mac, but if he does, that would be very problematic, and he would have to get rid of that. So that would be a big issue for him. Also, maybe in a confirmation, he's going through a nasty divorce. That might not go down so well.
So on the Bessent side, also curious, you wrote a little bit about how Trump himself almost name-checked him at a rally. So what was the trade that Bessent was actually making when it came to kind of optimism? We're talking a little earlier about this whole idea that, is Trump better or is Biden better for the economy? This was an investor, wasn't it, that kind of bet on a Trump rally at one point?
Yes, absolutely. He said in a letter to investors back in February that he thought that the market was going up in part because people were betting that Trump was going to win the election, and that it would keep going up until and unless it looked like he was not going to win the election. And he put a lot of money in that, and it's been a very good bet for him.
Well, like I said, a most read story on the Bloomberg terminal today. Be sure to check it out. Our big thank you to Kathy Burton. She's Bloomberg News hedge fund reporter here in the Bloomberg studio. Well, up next, speaking of the election, as Shonali mentioned, the past 3 years have been the best time to find work since the 1960s. The U.S. is doing better than the EU, UK, and Japan when it comes to growth. So why is Biden getting hit in the polls? We speak with our Real Economy team reporter, and we get the data right after this. This is Bloomberg Business Week.
This is Bloomberg News Now. News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it. With Bloomberg News Now, get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index moving lower, on track for a winning week, where right now the S&P is lower by 9 points, down 0.2%. Dow Industrials holding on to a 10-point gain, with the Dow at 39,880, little changed. On NASDAQ, lower by 66, a drop there of 0.4%. 10-year, 4.41%, with a 2-year that's yielding 4.81%. Spot gold up 1.6% now, higher by $38 the ounce to $24.15. And West Texas Intermediate crude $79.99 a barrel, up now by 1%. GameStop shares now lower by 24.3%, tumbling again for a third day of declines after the company said it may sell up to 45 million shares, further pairing the meme-fueled rally that had sent the stock flying at the start of the week. AMC was another big winner earlier in the week. AMC Entertainment down now by 4.3%. Recapping, stocks are mixed. The Dow up barely, up by 1 point, little change there. S&P now in the red. S&P down by 11, a drop of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. Well, as I mentioned, the Biden years have been the best time to find work, going all the way back to the 1960s. The U.S. has bounced back from the pandemic with stronger growth than international peers, such as the EU, UK, and Japan, and stronger growth overall than under President Trump. That said, Americans give Donald Trump the edge over Joe Biden on the economy in poll after poll. That's because instead of being focused on the strong economy, voters are focused on the steep jump in prices from the post-pandemic surge in inflation. Mark Niket is a Bloomberg News Real Economy Team reporter. He joins us from Columbus, Ohio. Mark, let's talk data here. We're Bloomberg, after all. So what do the data tell us about how Americans under Trump did versus how they're doing under President Biden?
Well, our Bloomberg economists looked at 6 key economic indicators, and
to gauge the performance of the U.S. economy under both presidents. And it turns out conditions were better under Trump for disposable personal income, inflation, the stock market performance, and mortgages, while the unemployment rate and GDP, overall economic growth, was better under Biden. But it was really those kitchen table metrics, inflation, prices, and income, disposable income, that I think is really carrying the day here with voters. That's what they're focused on. This affects their day-to-day life, and these kitchen table issues are really driving their opinion about the presidential candidates right now.
It's interesting because when you look at inflation, it's such a complicated story, isn't it? This whole idea that, yes, prices are up, but then you're also upset about every part of that story. The idea that it's harder to buy a home as well with this higher interest rate environment too. I mean, ultimately, is it the higher interest rate regime that President Biden has lived under that has really compounded the issue for many Americans as well?
Yeah, and the White House, would say, it's not really fair to hold high inflation against Biden, but that he's being unfairly hit with high prices because, he took office at the aftermath of the pandemic. He was still really dealing with the pandemic, and inflation that was driven in some parts by, the staging of the supply chains and other issues globally that, had nothing to do with the presidency. Whereas Donald Trump took office, in the middle of the longest expansion in history. But, it's a small comfort for, consumers who are facing higher prices. They don't want to hear that, inflation rate has come down and prices are moderating if the prices for eggs and groceries and other things they buy are more expensive today than they were 3 years ago.
Yeah, Mark, as I was reading your story, I felt like I could have shared an anecdote from what happened over the weekend. I was visiting a friend in Colorado, and I was at a hardware store buying a specialty battery for something. And I went over to the battery section. There were two gentlemen over there, and I said, okay, this is where the batteries are. And they were both talking about how much more expensive batteries have become in the last, and they specifically said this, 3.5 years. And what struck me about that comment was, well, that just goes exactly to the time that President Biden has been president. This is something that I think Americans are thinking about a lot, not just at their dinner tables. And it's not good news for the current president come November.
Right, because you can tell people till he's blue in the face that the numbers are getting better or that other metrics are doing really well, like the unemployment rate. But if the prices are still high, that's just going to override everything. It also allows President Trump to say, well, I had the greatest economy in the history of the world when I was president, and we'll go back to that if you elect me.
Well, on that note too, is it that you have voters prioritizing pricing and inflation over jobs, or just also this idea that you started to recognize in the story where a lot of the jobs lost when you think about the Trump administration was during COVID? Did he almost get a pass on that because of COVID?
Well, I think the Trump campaign would certainly argue that it should be the case, that if you're going to compare the jobs record, you should only compare jobs in the first 38 months of the Trump administration to the first 38 months of the Biden administration, because that factors out the job loss because of COVID. But it kind of cuts both ways. The COVID hit on Trump, in some ways, helped Biden on the rebound. When the economy recovered, we recovered jobs that, had been lost in the pandemic that sort of factor into the job gains under Biden. So he can point to, this big job gain number. And it's not all from, COVID recovery, but, just the fact that the economy was recovering and coming back from the lockdowns under Biden helps his overall jobs record.
Mark, a job is not necessarily just a job, and your piece goes into this when you actually peel back different layers of the data here. Talk a little bit about who have gotten jobs in the recovery that the current president has overseen.
Right, and that's one thing that the Biden folks would argue is a difference between President Biden's jobs records and the job record under former President Trump. And that is that the labor force participation rate of women, minorities, other disadvantaged folks is much higher under Biden. The unemployment rate is low for sure, but the economy is also pulling in folks into the labor force who traditionally have not been part of the labor force. So the idea is that, the rhetoric, at least the campaign rhetoric, is that it's an economy working for more people and all people, not just for the few.
Speaking of kind of wealth and advancement here, the stock market has done, as you mentioned the story, but well under both presidents. Is there an investor's choice here in terms of, which president would be better for them?
Yeah, that's a good question. And we're kind of seeing, Silicon Valley at least start to take sides with, President Trump on that score. But I'm not so sure that's just because of where polling shows and they just want to be on the right side. I'm not sure there's necessarily, from an investor's standpoint of view, if you're concerned about, stock market performance, our data shows that, the markets have done very, very well under Biden, despite the fact that we're in this high inflation environment. And in fact, it could be if the stock market stays on the trajectory it is now, Biden's record will match the record under Trump, which is pretty good under his tenure.
Mark, we often throw around the famous political catchphrase, "It's the economy, stupid," when we're talking about the economy and elections. But in the election of 2024, is there any indication that the economy is not the most important element to the American voter come November?
Yeah, there is some polling out there that shows immigration is a bigger issue for some voters than the economy in this cycle. Particularly if you live near the southern U.S. border or you're affected by immigration issues. President Trump is clearly trying to take advantage
NYMEX natural gas June futures settled at $2.62. Diesel June futures $2.48. Gasoline June futures $2.57. WTI crude June futures $80.06 a barrel, which is up 83 cents or 1.05% on the session.
The focus is predominantly on immigration. And it could just be this is a geographic thing, right? Where, if you're in an area where, the economy is not as doing as well or comparatively is not as strong as other areas, the economy might be more important to you. It's sort of a difference in this cycle is immigration is really, in some cases trumped the economy for a lot of voters.
It's interesting, Mark. We have all this data that we get now and the polling and a lot of great stuff on the track record. And the other reality is we are still months out from the election itself and a lot can change. And you just days ago really wrote about this idea that the second quarter is starting out slow. Things can change meaningfully before now and the election. What are the biggest risks for President Biden heading into it?
Well, the biggest risk is that the economy will actually slow down the way the Fed wants it to. We're in kind of this unusual environment now where, we're seeing, strong economic growth, but inflation hasn't moderated to the level that the Fed wants to begin cutting interest rates, which would in turn, boost the economy. So the story you referenced just highlighted the fact that we're starting to see economic indicators come in, housing starts and retail sales that show that the second quarter is off to a slow start, which in a perverse way is good news for the Fed because a slowing economy means, inflation can get under control and they'll be in a position to cut interest rates. So the risk for Biden, I think, is that the economy slows too much, right? That, we see these indicators come in that show a weakening of the economy. And if we don't see the Fed cutting interest rates until, later this year or even into 2025, he won't benefit from any of that economic boost.
That's a good point. Fed friendly, not necessarily President Biden friendly when it comes to that economic data. Hey, Mark, great to have you join us. Thanks so much for taking the time this afternoon. Do appreciate it. Mark Niquette, Bloomberg News Real Economy team reporter. Up next, we're staying on inflation and the American consumer. We're going to check in with the lead at the Carney Consumer Institute for an update on what consumers are noticing when they're shopping. First up, though, a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. We're hearing now from top-ranked golfer Scottie Scheffler, who was arrested this morning on his way to the PGA Championship in Louisville, Kentucky. Now, Scheffler says it was a chaotic situation and that he misunderstood what he was being asked to do and that he never intended to disregard police directions. The Masters champion was arrested for not following police orders during a pedestrian fatality investigation. He's charged with second-degree assault on a police officer, reckless driving, and some other offenses. The Israeli military says its troops in Gaza found the bodies of 3 Israeli hostages killed by Hamas in its October 7th attack, including German-Israeli Shani Lauk. The military identified the other 2 bodies found as those of a 28-year-old woman and a 56-year-old man. The military says all 3 were killed by Hamas while fleeing the Nova Music Festival. That's an outdoor dance party that they were having near the Gaza border. The military did not give immediate details on where those bodies were found. Houston is in recovery mode after a violent cluster of storms rolled through that city, causing widespread damage and power outages. At least 4 people were killed. Utilities say it'll take at least a couple of days to get everybody's power back on. And Fed Chair Jay Powell is working from home. He tested positive for COVID. A Fed spokesman released a statement saying that he is experiencing symptoms, so he's isolating. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. We're looking at a mixed Friday here, on track for a winning week on the S&P. But right now, the S&P lower by 5, down 0.1%. Dow Industrials pushing higher by 0.1%. 39,909 right now on the Dow. NASDAQ down 55, a decline of 0.1%. 10-year 4.41%, with that 2-year 4.81%. Spot gold up 1.7%, up $40 the ounce right now. Gold 24.17, and West Texas Intermediate crude up 1.1%, 80.07 a barrel on WTI. Reddit is in a partnership with OpenAI that will bring its content to the chatbot GPT and other products, while also helping the social media company add new AI features to its forums. Reddit shares, they're up now by 9%. Again, recapping a mixed Friday for the U.S. stock market. S&P lower by 6, down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, we just spoke to our Real Economy team reporter, Mark Niket, about how different parts of the economy are informing voters, specifically how inflation under the Biden administration is overshadowing what has been the best time to find work in generations. On inflation, we did get a bit of good news this week with the latest CPI figures. Core CPI snapped a streak of 3 above forecast readings, and the year-over-year measure cooled to the slowest pace in 3 years. So that's the data. But how are things playing out on the ground for customers, for businesses, for retailers? We have back with us for answers Katie Thomas, lead at the Carney Consumer Institute. The company looks at consumer behavior data and insights to give businesses an idea about how to engage customers. Katie joins us once again from Pittsburgh. So Katie, in your most recent batch of research, what are you finding that customers are noticing when it comes to inflation? Are they noticing that it's easing? Because as we just discussed, that easing doesn't seem to be hitting voters and the polling just yet.
Yeah, well, they do comment. Fewer consumers are commenting about noticing price increases in certain key areas, such as food and gas. That being said, I think we're still seeing a bit of a struggle to connect that directly to how they feel about the economy. And so we are seeing consumers just increasingly be cautious. I think that's what you saw in the retail sales numbers this week, which is, I'm not overly concerned. I don't think we're doom and gloom, but we're seeing that slowdown that we've been anticipating, that consumers have finally reached a point where they're perhaps really having to prioritize or pick and choose how they're spending. And one of the major numbers that I'm watching, though, is personal job security. So, unemployment numbers are one measure, but it's really consumer spend is informed by how somebody individually feels about their job situation and how safe they are to either keep their job or find a new job if they need to.
It's interesting, too. When you're an investor, investors talk a lot about inflation slowing, but really it's the pace of increases slowing. And Constance Hunter over at Macro Policy Perspectives made a great point this week that for many Americans, the price is just so much higher than it was years ago for many products, services, housing. How do you view that disconnect? This idea that still people are living under the weight of these perennially higher prices, really, even if inflation is slowing at the rate it's increasing?
Right. I mean, I think
Brent
you're seeing a
crude
couple
futures
different
settle at
factors feeding here. So
$83.98.
some of the unfortunate news about consumers is you're seeing savings on a decline. So there was some recovery after the high savings during the pandemic in early 2023.
So Brent crude futures on the session are up 71 cents, or
Credit card
0.85%.
delinquencies also tick up. So in some cases, unfortunately, folks probably are not, they're probably spending a little bit beyond their means. Beyond that, it's just about consumers really evaluating their discretionary spend and how they categorize spend themselves. So where are they prioritizing? Where are they making trade-offs? And how can they continue to kind of navigate this complicated environment?
What about when it comes to what many would argue has historically been discretionary spending? I'm thinking of, Katie, something like travel, which, historically, if people don't have the money to travel, at least if they don't need to travel, they're not going to spend the money to do that. What are you learning, sort of like the new normal when it comes to travel?
Yeah, I think we all have a bias to sometimes stick with the way we've defined things in the past: consumer discretionary spend, consumer staples, and some, version of needs versus wants. But what we hear from consumers is they tend to define things a little bit differently, and they're able to really prioritize how they want to spend. Travel is a great example. So when we talk to consumers, 26% of consumers told us they consider their annual vacation to be a must-have spend. And in order to enable that, that's actually where we're seeing them pull back in other areas. So perhaps it's food and they're willing to, again, make trade-offs or even cut certain things from their typical grocery shop to really allow for that. Whereas certain items like food that feel like a staple, a lot of times there's things that they, again, can give up. Maybe I don't buy as many snacks this week. Maybe I go out to restaurants one less a week. And so I really think sometimes it's about seeing that bigger picture of how a consumer understands just how discretionary versus must-have something is.
I think we also have to differentiate types of consumers here, because you kind of hinted earlier about this idea that some consumers are feeling stress, and we saw retail earnings this week. We see more retail earnings next week, and you see upper to middle class customers trading down still. So buying cheaper goods instead of more expensive ones. A lot of commentary around how lower end consumers are feeling stretched. Where are the biggest discrepancies as you see it? Who is feeling the most pressure, and will that pressure start to widen among more groups?
Yeah, I think this is another area where we try to take a two-pronged approach at it. So one is the obvious, more traditional demographic income split. So looking at high, medium, low income. But another question we ask consumers is if they feel like they're living within their means or paycheck to paycheck. And what we found is folks that feel like they're living within their means, regardless of what income category they're in, there's more commonality there, and with the people that are living paycheck to paycheck. So I know, for instance, we saw Walmart's earnings release. I actually caught your segment on it yesterday. And I think the high income shoppers there is a great example of people. I think some of the stigma, maybe even around shopping certain stores, has just slowly gone away. Tightening wallets. They're getting the best bang for their buck on the basics.
Yeah, Katie, it's so funny. Well, I was just going to say, it's funny you bring that up, because we were talking about this in the newsroom yesterday after those numbers came out, and there were folks around my desk just talking about how the way that Walmart's in-store offering has changed, especially when it comes to groceries in recent years, just shows that it's really trying to go after so many different types of consumers right now.
Absolutely. You see it with some of their new private label launches, but they've also done more partnerships with direct-to-consumer brands over the years. They're not the only big box retailer doing it, but they are known for being willing to test and learn, but also if something doesn't work out, they kind of cut their losses and move on from it. So I think that you're seeing all these different types of retailers really try to adapt to the consumer and take all the data that they have and give the best experience possible. And I think even they're realizing certain things that perhaps we traditionally attributed to standard demographics like income, that's not really the case. Everybody likes to get a deal. Everyone likes the best bang for their buck. And so moving away from some of those preconceived notions has enabled a lot of success for retailers that understand their value proposition.
Hey, before we let you go, Katie, I want to just get an idea of what's coming up next at the Carney Consumer Institute. I know you have a report coming out next week about innovation, and it kind of shows the delta between how consumers see innovation versus how brands internally see innovation. Talk a little bit about what to expect there.
Yeah, well, we all know innovation is actually like pretty ambiguous as it is. It can be described to be anything from like a simple line extension to some, massively disruptive category or technological advancement. But in reality, lately, what we hear a lot of is like consumers are increasingly demanding more specialized, more niche products. And what we found when we went to consumers is that's not the case. So almost 90% of consumers told us there's either enough products in most categories or too many in some categories. So it's really about, I think, repositioning inflation to make sure we're doing it in the right way and not proliferating for innovation's sake, by just deepening some of those consumer feedback loops and really understanding when we want better, when we do just want new or more options, and kind of really trying to delineate, what's going to be most successful at any given time.
And Katie, certainly look forward to seeing that report. Thank you, as always, for joining us on Bloomberg Business Week. That's Katie Thomas, lead at the Carney Consumer Institute. The company, once again, looks at consumer behavior data and insights to give businesses an idea about how to engage customers. Well, taking a look at the equity market right now, seeing things are mixed. The Dow is higher by more than 0.1%, while the S&P and NASDAQ are both lower on the day today. Coming up, it is Options Insight with Abigail Doolittle on Bloomberg Business Week.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple is reportedly developing a significantly thinner version of the iPhone. That's according to the information. And it says that version could be released as early as next year. Apple shares, they're just about flat on the day right now, up less than 0.1%. GameStop tumbling again for a third day of declines after the company said it may sell up to 45 million shares, further paring the meme-fueled rally that had sent the stock flying at the start of the week. GameStop shares, they're down now by 23.8%. Also declining, AMC Entertainment, that stock now lower by 5.6%. Chevron's $53 billion deal to buy Hess Corp has received a nod of support from a major proxy advisory firm that said shareholders should vote in favor of it. Glass Lewis issued a report saying that while some aspects of the merger are less than ideal, Hess shareholders will have the opportunity to participate in the potential future upside of the combined company through newly issued Chevron shares. Both Chevron and Hess Corp up by about 1.1%. After earnings, Applied Materials, the largest U.S. maker of chip-making machinery, is trading lower. Last night, it failed to impress investors with its latest forecast following a rally in the shares this year. Applied said fiscal third-quarter sales will be roughly $6.65 billion. That did top the average Wall Street estimate, but some analysts had predicted revenue as high as $7.13 billion. Again, Applied Materials shares, they are trading lower today. Applied Materials down now by 1%. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week, and this week was one of the return of meme stocks. And next week, we, of course, have NVIDIA earnings. On both of those topics, it's time for Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle, who's joined by David Bauer, Managing Director at O'Neill Securities.
Thanks so much, Tim, and great to have you with us, David. And as Tim was mentioning, this really has been the return of the meme stock rally. It's pretty incredible. Earlier this week, GameStop in 2 days had gained more than 130%, and now over the last 3 days, it's down 70%. On the month of May into the 3-day decline, it had been up about 500% in the month of May. So those meme stock investors out in force. What are you seeing options-wise there? Was there any signal options-wise ahead of the meme, the scary kitty? Is that his name? Runaway
Roaring Kitty.
Roaring Kitty coming back out to tell you that this might have been the case?
There was some, well, first of all, Abby, thank you for having me on again. There was some activity last week, but on Monday and Tuesday, option call volumes really exploded. There was over 1 million calls traded in AMC on Monday and Tuesday, and over 400,000 calls traded in GME as well. What was interesting is that you had the same implied vol spot up, vol up phenomenon that we had back in 2021. And then when the stocks were down on Wednesday and Thursday, you saw the vols come back in.
So before we switch to NVIDIA, I'm really curious. So if it's very similar to what happened in 2021 in terms of implied volatility, are you able to make any predictions of sorts what's next for these meme stocks? Will we see the rally resume, or are we going to see these stocks go right back to where they were? Because, GameStop just a few weeks ago had been a $10 stock, and then a couple days ago it was a $50 stock. Now it's a $21 stock. Lots of money being made and lost.
So I think the big difference between now and then is the institutional short base is much less now. Back in 2021, the GME short interest was 140% of the float, and on Monday it was only 25%. People have learned their lesson, and I think the extent and the duration of the moves will be less extreme. Hedge funds learned from this, and what was different this week is we saw large option prints on both the long and short side of the market, which we didn't, really see last time people were long puts.
And then very quickly, in terms of NVIDIA, this could be a make or break moment for the markets in terms of their report coming up on Wednesday. Are you seeing anything interesting relative to calls or puts or other derivative activity there?
Well, NVIDIA's implying an 8.5% move for earnings, and over the last 8 quarters, it's moved an average of 8.5%. The all-time high is 974. We're right near there. The derivatives group at William O'Neill Securities likes buying the June 1,000-1,100 call spread for around $20, gives you about a 4-to-1 payout, and we And the reason that we like call spreads is because skew is flat to slightly inverted.
So you're bullish, or at least O'Neill Securities is bullish NVIDIA. Thanks so much, David Bauer of O'Neill Security. Great to have you with us on Options Insight. Tim, back to you.
Thank you so much, Abigail. Do appreciate that. Just a reminder, NVIDIA earnings happening next week on May 22nd after the market. NVIDIA shares down by about 2% right now, trading at about $925 a share. Well, for those of you sticking on Bloomberg TV, coming up next, it is the close. If you're going to continue with us on Bloomberg Radio, we got a lot coming up, including the end of the first week of the Archegos trial, Bill Hwang's first week on trial, what you need to know about the spectacular collapse of the $10 billion firm. Also in the magazine, Walgreens and CVS try to fix America's flailing pharmacies, and David Weston is going to be joining us to stop by with a preview of Wall Street Week. Speaking of Wall Street, well, the Dow is higher by 0.2%. The S&P 500 right now is flat, while the NASDAQ Composite down a little more than 0.1%. This is Bloomberg Business Week.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
The best question I get all night.
Bloomberg. Top experts. Great questions.
A roller coaster ride of a week winds down for meme stocks, metals, and treasuries alike. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. It's triple witching, but like nothing happening.
I almost forgot about the triple witching.
I know.
And I still don't know what they did with that fourth witch.
Because nothing's happening. So it's been quite a week, to be sure, but currently not a lot's going on. So the S&P is pretty much flat, but the S&P is now up for a weekly gain 4 weeks in a row. We haven't seen that streak since February. Other superlatives coming your way over the next couple hours. Individually, one of the best performing stocks is Freeport-McMoRan Copper and Gold, and the Y is in the name, copper and gold, both at record highs. Freeport is at the highest level since July of 2011. Silver, highest level since 2013. We're going to break down the why behind all of that. And here's your check-in on the 10-year yield. Yields up by about 4 basis points. Barclays scraps its short call on the 10-year, though. Quite interesting headed into next week, Romaine.
Yeah, interesting, too, as we close out the week and take a closer look at that once dormant meme stock mania that, of course, reawakened on Monday and Tuesday. That's faded a bit here to end the week, at least for the two pillars of that trade, GameStop and AMC. But there are still embers out there burning in the ash pile. Take a look at Tupperware, up more than 20% today, erasing losses from the past two, locking in what's now going to be its best week going back to October. Rent the Runway on a 7-day rally right now that's more than doubled its market value over that stretch, and Robinhood right now on track for its best week of the year. A conversation up ahead with Professor Jeremy Siegel about investor psychology and the behavioral narrative right now around the follow the herd mentality. But Citi strategist Scott Cronert already had something to say on that topic, telling clients in a note today that a contrarian indicator measuring stock trader sentiment that re-entered euphoric territory this week, lowering the probability of forward returns over the next year. Cronert writing that the wild moves in meme stocks are hard to explain using any traditional logic, but does provide perspective that the system is still awash with liquidity despite what Jay Powell says about tighter financial conditions. Those looser conditions also on display in two other pockets of the market this week, metals, which Alex was just talking about, and treasuries. A Bloomberg Industrial Metals sub-index right now on pace for its best week in almost a year and a half as copper trades around its record highs. And then there's that Treasury rally showing renewed signs of life amid all that confluence of economic data this week. Bond funds right now logging a 21st straight week of inflows, according to Bank of America. And Michael Hartnett, the strategist over there, saying that with the anticipated next moves in monetary policy and the risks to corporate profits, investors should prepare for an even greater reversal of that anything but bonds trade, Alex, in the second half of this year.
But here's how my question is from yesterday, too. Why would you sell stocks right now? Like, what's that reason? And I don't really have one. And you were just talking about it. Financial conditions, this shows kind of, well, it's hard to argue with that stock rally. The blue line is the U.S. Bloomberg Financial Conditions Index. The white line is the S&P. Super basic. As it goes lower, it means financial conditions are tighter. And as you can see, they track relatively the same. Clearly, after COVID, there was an influx of stimulus, and that was a whole different story. But you can see a little dip, move over here, see some tightening in financial conditions. Equities kind of follow suit. And then here's the why. After financial conditions kind of bottomed out here at the end of 2023, they've been steadily climbing higher and have now kind of leveled out, and that's helped propel the S&P higher as well. So until this materially tightens, why wouldn't you own stocks? Why wouldn't it be just a buy everything rally, remain except for the dollar?
All right, let's kick things off to the close right now with Christian Lawrence, Senior Cross-Asset Macro Strategist over at Rabobank. And Christian, I'll ask that question of you too. Is there still a case to be made for stocks, particularly given that they're sitting at record highs right now?
Yeah, I certainly think so. I think we'll continue to see inflows, and I think there's further upside from here. It goes back to that liquidity point of view, and it really raises the question, are rates restrictive? If we're seeing record highs in equities, we're seeing crypto flying, we're seeing credit spreads tightening throughout the last year, I'd argue rates probably aren't restrictive at the moment.
Well, this gets to a broader... Wait, I'm sorry, you think they are restrictive? Aren't restrictive,
yeah.
Right, because that gets to kind of what Scott Kroner was talking about as well, this idea here that we wouldn't have had the meme stock rally if things were tight.
Yeah.
We wouldn't have had some of the other moves that we saw even prior to the meme stock rally this week if things were tight. Why do you think, though, we're hearing from Jay Powell and other Fed members trying to make this case, at least publicly, that things are tight? Are they just trying to sell us on something that they themselves don't necessarily believe?
Well, I mean, we've certainly seen Powell essentially remove that right tail risk of potential rate increases, but I think they're going to be stuck where they are for some time to come. We're not going to see these aggressive rate cuts that we've seen priced in. I mean, if you think about the market, we've gone from, in the last 6 months, 2 rate cuts to 7 rate cuts, back to 1 rate cut, then back to 2 rate cuts again. So there's a lot of noise around this, and I think there's a lot of uncertainty. I mean, the bottom line is, just look at the Fed's dot plot. For the end of next year, you have one member that thinks rates will be double where another member of the Fed thinks they'll be. And I think a lot of the problem is essentially we're talking about economic theory as though they're rules of physics. And the bottom line is economic theories work for certain periods of time, and in different periods of time, those same economic theories don't work the same way.
And to that point, I mean, you're right. Fed officials have not been talking about that, except Kashkari kind of raised it this week. Like, have we seen financial conditions tighten enough? Is it tight enough? To you, does that mean just no cut, or does it mean a hike?
I think the bar to hike's pretty high, partly because I think Powell essentially ruled it out. But it's not just that. Is it really going to make a big difference if we raise rates another 50 basis points? The bottom line is inflation has come down considerably, but it's not because the Fed raised rates. It's been mainly about the supply side. If you look at the areas where Fed rate increases are supposed to impact things like core services inflation, we haven't really seen any easing.
Right. I'm glad you brought that up. So Rick Reeder was on with David Weston for Wall Street Week, and the big headline that came out of that was that actually, if you want to tame inflation, cut rates. Because people who have money are now making so much money, whether in treasuries, whether in money market funds, whether in high-yielding savings accounts, that's helping spur that services demand and services inflation. I know it sounds a little turkey-esque, but like, is there any truth to that from your point of view?
I think in the current environment, yes, there is some truth in that. There's essentially a transfer of wealth from the government to savers, to big corporates with large cash piles. Now, that doesn't necessarily mean we need to rip up the economic textbook, although I think some probably should be ripped up. But it doesn't mean that that's always going to be the case. But right now, I think there's a strong argument to be made that rates have been somewhat inflationary, yeah.
Well, then how does the Fed sort of combat that?
The Energy Department says the U.S. buys 3.3 million barrels of oil for the Strategic Petroleum Reserve.
They can do with the rate hikes already. I don't think adding 1 or 2 more 25 basis point hikes is really going to change much. Well, I mean, what can they do?
Well, I'd argue their hands are pretty tight.
Yeah.
I mean, if you think about monetary transmission mechanisms, one of the main ways it usually works is through to the mortgage market. But the spread between effective mortgage rates and current mortgage rates has never been so wide.
Yeah.
Essentially, you're in an environment where largely, I think, because of the structure of the housing market at the moment, the monetary policy is not that effective in driving the real world.
Is fiscal policy complicating things?
Yes, definitely. Fiscal policy, I would argue, is the main driver of inflation at the moment.
And the Fed can't do anything about that.
No, it certainly can't. And it can't do anything about the supply side. So I think when you look at the supply side of things, which I do think is the main reason we've seen inflation come down, well, I think the good news there is probably behind us. I do think there's room to see some of those supply pressures re-emerge, particularly when it comes to the pass-through from energy prices, potential rise in shipping costs earlier this year passing through. So I'd argue the good news on the supply side is probably over.
All right, Christian, really interesting stuff here. Christian Lawrence there, Senior Cross-Asset Macro Strategist over at Rabobank, helping us kick you off to the close here on this Friday afternoon. When we come back, a look at the big rally and, well, the big drop that we saw for some of the meme stocks. Jeremy Siegel over at the Wharton School going to stop by to talk about investor psychology.
Plus, Jeff Curry calls copper the best trade he's ever seen on the long side. We're going to break down what's driving the record highs for the metal.
And Robinhood, believe it or not, on track for its best week of the year, sending longtime bear Craig Siegenthaler to deliver a double upgrade. Everyone back in the pool right now. That's part of our top calls, and it's coming up in just a second, right here on The Close on Bloomberg.
This is Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Season is here.
This is a get out the popcorn moment.
And across the board, just pummeling of expectations.
Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey, folks, we've got Microsoft.
Apple earnings crossing the wire.
Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
A lot still to come.
With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment? I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
I'm confident that this time it's liftoff, and I think we're going to see more momentum behind it because you have three sources of demand this time around, meaning green capex, AI, plus military. Back in 2021, all we had was the green capex demand, and now it's in full force. Supply's not there, inventories are tight.
That was Carlisle's Jeff Curry on his expectations for copper prices, which are trading right at record highs. It's been quite a week for copper. Joining us for more is Bloomberg intelligence analyst Mike McGlone. Mike, there's a couple different things happening in a couple different metal markets, but I just want to focus on copper. What is your biggest takeaway from this week? Because a lot of it had to do with short covering, a short squeeze that happened in the copper market, and dislocation between prices in London and prices in New York, prices in the U.S. What happened?
Yeah, I think that's the start and where we should start for the week, Alex. Future shenanigans. There was a significant short squeeze in the front copper futures that trade on the CME that trades in pounds. It popped up to 5. Just about a month ago, it was 4. It squeezed those front contracts and the backs are much lower. But that steep contango reminding me of when silver peaked around 50 in 2011. It's very rare in copper, but so far it's worked. The thing is, you look at managed money net positions in overall copper, they're pretty long. They're very long. I mean, hedge funds are about 30% of open interest. So we just had some nuances in the copper squeeze in New York, so that contract's made a new high. In London, it hasn't. And to me, it's very scary when I see something like that because copper's very autocorrelated. Now, I believe in the long term what Jeff says, but Jeff, when he comes out with things like that, I've known him for decades, is oftentimes they can make peaks, i.e. crude oil at 130 a year ago. It's dropped 50%, 2 years ago. So now I'm worried about the little autocorrelation factors in copper with this future squeeze.
I am curious, too, when we talk about, Mike, the potential for this rally to continue, if it is something more than just a short squeeze, there is something else driving it here. Is there enough resistance on the other side of the trade that might actually blunt additional gains? Are you seeing anything in that data?
Well, in the micro, it's the positions. They're very long. 30% of open interest in copper futures is about as high as it gets. So positions are already long. I suspect that's going to change. We'll see that data later today. And then the macros, I think, a little bit more of a headwind than he thinks. First of all, China bond yields are dropping to the lowest in our database, 2.3% in the 10-year CGB versus 4.5% in U.S. That's a sign of deflationary trends in China. And then there's beta. The U.S. stock market at record highs and S&P 500 about 20% above its 100-week moving average. Those are things that will revert and put pressure on copper in the short term, which I think is part of the problem here. We're seeing some animal spirits. It's just a lesson you learn in copper and silver. When it spikes like this, let the futures guy have it. The prudent traders are probably lightening up a little bit.
No, Mike, you bring up a great point because I think that Jeff is really much talking about a structural shift in the market and that longer-term demand from things like the energy transition, whereas you're also talking about it as still a very cyclical metal, very much tied to China. Where does silver fall in this relationship? Because silver, out of nowhere, 2013 high.
That's right. It's right in the middle, Alex. I'm glad we went there. Silver, to me, is between copper and gold. And remember, what's happened here? Everything's following gold, at least all the metals. Gold's been sitting at record highs and been on that trajectory since early in the year, and it's still doing it. And who's buying gold? Central banks led by China. So there's potential that China's hoarding other metals. But silver, to me, is also, it's known as the devil's metal for a reason. It's breaking out, but it's got a lot of room. But that silver-gold ratio dropped to 77 now. That's usually pretty good support level, particularly with the stock market very expensive. So I still think gold's going to be the better one by the end of the year. But overall, this is a bit of a revenge of the nerds. I encouraged Bloomberg Index to create the Bloomberg All Metals Index about 5 years ago. To me, metals and commodities are the best place to go for the long term, and it's showing it right now.
All right, Mike McClone, Bloomberg Intelligence Analyst down there in Miami. A closer look, spot gold right now at that $2,400 level here in U.S. And, of course, copper. I know you've been keeping an eye on that, Alex, at least on the LME right now. Basically right below 10,700.
Yeah, and then here in the U.S. is about $5 a pound. But what I do find really interesting is that the longer bet for copper, and just I feel like research report after research report, they're upgrading their long-term targets in a big, big way. And all you have to do is look at, say, BHP trying to make a bid for Anglo.
Yeah.
I'm sure BHP is going to be like, we're good without Anglo, no problem. But that's a pure, like, I want to buy those copper mines kind of thing.
I do, though, feel like the trade is getting a little lopsided, right? I mean, even if you believe what Curry was talking about, meaning the structural things, the fundamental things that will drive this, and I think most people buy into that. It's really about timing.
Yes.
And is the price where we're at today, is that really warranted, given that a lot of what he's talking about is still a few years into the future?
And we saw that with lithium a few years back, too. That like, okay, guys, we need it for EVs, and then everyone mined it, and then all of a sudden prices cratered, and then they had to close up the mines.
And then you remember the great uranium rally a little while back? I haven't looked at uranium in a while, but I'm sure we'll be talking about that sometime soon.
I actually got pitched a uranium CEO, so I'll get back to you on that.
Okay, Alex Seal will definitely be booking someone on uranium. You can bet on that. Meanwhile, we're keeping an eye on what's going on in the equity markets as well. And one of the big gainers today is Robinhood, on track for its best week of the year. And analysts at Bank of America finally taking notice, reversing their stance here with a double upgrade. It's one of our top calls, and it's coming up next here on The Close on Bloomberg.
On season 2 of The Circuit, we're walking with the titans of banking.
Hello! You guys love these meet and greet things.
We do! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations. And we start off with Bath and Body Works, the retailer of candles, lotions, fragrances, getting a boost to neutral from underweight over at JP Morgan, with the analyst seeing potential for a return to revenue growth in the current quarter. And he touts some inflection within e-commerce sales and implies that this partnership that Bath and Body Works has with Netflix and the hit show Bridgerton may have something to do with it, saying both web traffic data and Google search trends showing that candle collaboration might actually be paying off. Those shares higher by about 2% on the day. Darden Restaurants, that's up next. The owner of casual dining brands like Olive Garden and Longhorn Steakhouse upgraded to buy over at BTIG, with the analysts saying investor concern about sales and consumer appetite is, quote, overly worrisome. He also suggests that the company lean further into advertising promotions, or at least modest price increases to drive same-store sales growth. Those shares getting a decent bid on the day, up about 1.5%. And finally, let's take a look at Robinhood. A good day and a good week for that stock, as analysts over at Bank of America raised their recommendation to buy from underperform, citing rising engagement from retail traders, driven by, this week's meme stock mania, as also because of accelerating organic growth that will drive earnings up in the coming years. Those shares having a phenomenal day, 12% higher from where they were yesterday, and those are some of our top calls. We do want to stick with that last one there on Robinhood here. You see the numbers on your board. You see the numbers for your week. The man behind that double upgrade, Craig Siegenthaler, joining us right now, Managing Director over at Bank of America. And I am curious here, Craig, about this call. Is this based on some of the, activity that we saw with regards to meme stocks this week, or is this based more on something a little bit more long-term and sustainable?
So honestly, it had nothing to do with what happened this week. There's really two things. There's a very long-term trend, which is the fact that millennials, Gen Zs, Gen Xs, my children, they're going to interact and invest through mobile. And this is a long-term secular shift towards mobile, which Robinhood is in the center of. The second thing is the cyclical trend, and that's it. We think we are in the early innings of a multi-year period of rising retail engagement. This will help Robinhood's organic growth, trading levels, and even things like margin loan usage.
I am curious, though. I mean, given that you basically did a double upgrade here, Craig, something clearly changed for you. So why does the story look different to you today with the note that you put out versus, I don't know, a few weeks ago or even a few months ago? What's changed?
I think there's a lot of octane in the Robinhood stock and their financial statements. And what I mean by that is bear markets will be very bad for Robinhood because their clients will go dark. They'll become less active. They won't trade a lot. They won't open accounts at the same frequency. And in bull markets, it's the opposite. And we saw this already. We saw this play out in the 2019 to 2021 COVID period, which was actually a perfect storm for them, when all the results were very, very strong. But remember, when the Fed started raising rates, and as I call it, things went dark, activity levels slowed. Now, that's when we rated the stock and underperform through that bear market period. What we're saying today is we think there's a multi-year period, which is the opposite of that, rising retail engagement, which is better organic growth and better trading levels.
Craig, is there a direct correlation between things like the jobs number or average hourly earnings or household savings that this stock will then correlate based on that thesis?
Yes, but indirectly. At the end of the day, we want a really strong stock market. We want lower interest rates, and combined, that'll drive higher retail engagement. In my view, that economic setup and the economic variables that drive that will make Robinhood a very strong stock. And the B of A Econ team is looking for the first Fed rate cut in December, followed by more. Lower interest rates are good because they supply the financial markets with more liquidity, and that should drive up stock markets and also should drive up retail engagement, which is really the theme of what we did today.
Craig, how do you price in the broader risks? For example, right, we got a Wells notice from the U.S. SEC warning that Robinhood faces an enforcement action over its crypto business. Like, nothing firm, right? But these are the risks that are still percolating. How do you discount for that?
So the Robinhood stock was $20 a little bit ago and sold off to $16 around the Wells notice. So I thought a lot of that was priced in. Now, with Robinhood, they have a very conservative offering of coins and capabilities, which I think should help with their scenario with regulators. And also, there's a lot of variables in play. We don't know who will be president next year, for one. We don't know who will be running the SEC. So these things take time. But I think at the end of the day, they have a very conservative offering of coins and capabilities, which should help them through this scenario.
Let's get to a broader question too, Craig, about competition in this space. When Robinhood sort of came on the scene and it sort of was capturing all this imagination and attention, we did see some of the more established competitors try to broaden out their offerings to appeal more to the retail cohorts that Robinhood seemed to have a lock on. Is there any concern here that we could see maybe a further push by some of those competitors into that space?
I think they're very different. I think at Robinhood, they made investing fun. They also give you a very high value proposition to clients, and they leverage technology to do that. And what I mean by that is you trade for free, not just stock, but also crypto for free. So you get a lot of value out of that platform because they can sell their orders to market makers. Also, if you're a Robinhood Gold customer, you get about 5% on your cash. Compare that to Charles Schwab, that's only 45 basis points. So we think they have a very competitive offering. We think they have a strong brand name with individuals aged 20 to 40. And though their average account size is actually only $4,000, so as these younger investors accumulate wealth and age, we think they're going to stay at Robinhood, and we think this will have a very positive impact on the size of Robinhood's accounts.
All right, Craig, thanks a lot. Really appreciate it. Thanks for jumping on with us. Craig Sagenhalter over at Bank of America. I mean, it's the gamification of stock trading, right?
Yeah, I mean, obviously, I don't know if they pioneered it, but they certainly popularized it here. But I do worry, though, because I feel like now everybody's doing this.
I know.
Yeah.
Also, like, do we want 19-year-olds doing that? Like, accumulating wealth is different than trading stuff. Anyway, the psychology behind all of it. Speaking of, Jeremy Siegel, Professor Emeritus at the Wharton School of the UPenn, will be joining us. This is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. You guessed it, it was the week of the meme stocks. And I wanted to take a look at a 5-day chart, Romaine, because yes, we've sold off. Yeah. But nevertheless, we've still added net from last Friday, like $1 billion in market cap to GameStop on just one tweet that meant nothing.
That meant nothing. And we just point out, I mean, we're only up like something like, I think, 18 or something % on the week, despite the fact we were up like 200% after Tuesday. But it gets to this idea of, why would people even chase after that? I mean, like, the psychology behind it is like you have this cryptic tweet, and look, I get it. He was obviously kind of the big, Roaring Kitty was obviously the big sort of catalyst for the last big meme stock frenzy in 2021, but like, there was nothing else there.
Right, so is it loose financial conditions? Is it like leftover savings? Is it just like people need fun? Yeah, is it boredom? Like, we're not all sitting at home anymore, right? So to help us with this conversation is Jeremy Siegel, Professor Emeritus of Finance at the Wharton School of the University of Pennsylvania. Professor, help us understand, like, what did you make of what happened with GameStop this week?
Yeah, that was a repeat of what happened a few years ago, and I'll say the same thing I said a few years ago. Long-term holders are not going to be happy in these stocks. In the short run, you're going to the casino. You may win big. You may have a lot of fun, but as a long-term hold, it is doomed. None of those are going to produce really any returns.
So, Professor, last time, everyone was sitting at home. Everyone had pandemic checks that they may not need to pay their bills, and that's what the excuse was for fueling all of this. Supposedly, that shouldn't be the case this time. Supposedly, our household savings are being drawn down. We're charging more on credit cards. Everyone should be back in the office. So what gives?
Well, there's still that mystique. I mean, there was that movie, Dumb Money, that, sort of glamorized the whole process of, giving it to the short sellers. And I think that ethos was still there. And boy, I mean, as you said, one picture could spark several $1 billion is something really to ponder about when you're talking about quirks in the market.
Yeah. Well, that's what I'm curious about when we talk about sort of who has the power to really do that. And I know that this might be a bit of an anomaly, but we've seen this on a smaller scale from time to time where one particular person who has some degree of influence for one reason or another comes out, says something, and then the whole herd just kind of just follows behind it blindly, if you will, here.
Yeah.
You understand just kind of how market psychology works. Is it materially different today than what it was, I don't know, 30 years ago, or we're just kind of seeing a different iteration of it?
You know, short squeezes have been with us for centuries. You know, you can go back in the 19th century, those famous short squeezes on railroad stocks, and there's been in the commodity market. So, you know, these type of situations, you know, certainly have occurred before. That it's occurred in the way that it has with, you know, with young people rather than seasoned speculators is the difference. But we certainly have had episodes of this type of behavior in the past.
Does that type of behavior, and more importantly, some of the market distortions that grow out of it, is that something material, or is it just kind of like the market as a whole can just deal with it in passing, and then at some point we get back to reality?
Yeah, I mean, really, when you talk about the, you know, you said a billion, maybe 2 billion was added. You know, when you consider the trillions of dollars in the stock market, it really does not have a big impact. I mean, some of the short squeezes of the past in major stocks like railroads when they were flying back in the late 19th century, or when the Hunts had a short squeeze in the silver market. I mean, those were things that really did matter. This, again, is a lot of fun for a lot of people, but really, in the big picture of equities, is not very significant.
I mean, it probably definitely mattered to Gabe Plotkin like a year and 2 years ago, but I know your point is taken. I'm going to go to the topic that Wall Street loves to hate, and that's Dow at 40,000. It's a nice round number. We like round numbers. That's when I get the phone call from my mother-in-law asking me about Dow 40,000.
Yeah.
Is that a psychological milestone?
Oh, yeah. I mean, I think all these 10,000s are psychological. 50, of course, will be the kind of half of that 10,000 level. You know, we make a lot of, you know, everyone says, well, the Dow is 30 stock. You know, it is a very imperfect measure. It started back in the 19th century when we didn't have computers, so you just added the price and divided by 30. It was something that people would do, and it was only calculated once an hour back then. Of course, our computers now are able to do any sort of math, so people make fun of it. The interesting thing is, if you go back 50 years, the compound return on the Dow has not only challenged the S&P, but actually exceeded the S&P. So as an average, in the long run, I wouldn't make a lot of fun of it.
Wow, okay. That feels counterintuitive to some Wall Street believers over there. So I guess what happens now? Like, where do we end here?
Well, I mean, you know, we could talk about where are we with this whole market. I mean, we are rich. Things are good on the earnings front. You know, there's this big question about whether the Fed will cut or not. What I keep on saying is, listen, there's good cuts and there's bad cuts. Bad cuts if the economy slows a lot. That's not going to be good for the stock market. Good cuts if inflation slows with the economy strong. Wow, that's going to, you know, continue to propel the market upward. So it's not just a matter of waiting for cuts. It's a question of what will prompt those cuts. I do think we're going to have some at year end. And, you know, I'm very hopeful that it's going to be that decline on the inflation front.
When you look at market fundamentals, then, I mean, even in anticipation of those cuts, Jeremy, the question then has to be asked, are economic fundamentals supportive of corporate fundamentals, which in turn would be supportive of market valuations? If we don't get those cuts, does that matter?
Yeah, well, we're selling, maybe 20 to 21 times forward earnings. Certainly that's a bit richer than history. I've actually argued that really it should be selling at that normally stocks sell with kind of too much of a discount to their fundamentals. So, you know, when there's degrees of optimism, you get back up to what I think is a fundamental valuation. But, yeah, you know, it's quite interesting because the real economic indicators have fallen short of expectation. You know, a lot of people are talking about 4% GDP. Now we're barely talking about 3% GDP in the second quarter. Now, that's not terrible. there might actually be a downward revision now that we got the data on retail sales on the first quarter. So, you know, the growth isn't quite as strong as we had hoped for. Sticky inflation. We hope that, you know, I've talked about the rental component being distorted, and hopefully lower rents are going to eventually fall into that index. So there's a lot of positives. Technically, it still looks good. I mean, we don't see any sign of recession, but we have to keep our eyes open. And as I said, this last week and a half, I think almost every real indicator actually came in below expectations.
Yeah.
So I just watch those things to see whether that is going to accumulate or not. Again, it could just be temporary.
All right, going to have to leave it there. Professor, always wonderful to talk to you. And by the way, wonderful tie you got there.
You guys are twinning. You're twinning. We're just pointing this out. They're twinning.
All right, Professor Emeritus over at the Wharton School, over at the University of Pennsylvania, Jeremy Siegel. And I think this last point, I think really kind of hits it on too. I mean, it goes beyond market psychology. Maybe there is a case to be made for, a fundamental case to be made for where valuations are right now.
Absolutely.
Not necessarily for GameStop, but I'm talking about the broad market.
But for, you know, you deliver the numbers, you deliver the goods, and this will be a good test for NVIDIA next week, and your stock can rally. What I find really confusing is that obviously the NFIB survey, better than before, right? But still, small business confidence is nowhere near public CEO confidence, right? Consumer confidence, nowhere near profits that we're seeing for big companies. Eventually, how does that square itself?
Yeah, well, it'll square itself economically. I don't know, for the markets, I guess people will always say, look, I mean, the S&P is, you know, a reflection of the large cap economy and not necessarily the Main Street economy, if you will, here. A lot more coming up here on the show. We've talked about Robinhood. We've talked about GameStop. Well, let's talk about Reddit. Those shares also soaring today after announcing a new partnership with ChatGPT maker OpenAI. It's our stock of the hour, and it's coming up next on The Close on Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
All right, it's time now for our Stock of the Hour and a closer look at Reddit. The shares of the social media forum unveiling a brand partnership with OpenAI to bring its content to ChatGPT and other products. It will also let Reddit add new AI features to its online communities. Abigail Doolittle joining us to talk a little bit more about this. 10% pop here on the day. Not a bad day. I think it's probably going to be their best day or maybe best week since they went public back in March.
Yeah, it's definitely a good day. Investors cheering this partnership. So if we break it down in terms of what both sides get, so relative to what Reddit gets, they basically get a, let's call it $40 million revenue stream every year, plus the possibility of being able to put AI interface into their boards, which I don't use. I don't know if you guys use. Actually, I shouldn't say that. I use every now and then through a Google search. And then you do use?
Yeah. What's your username?
I haven't even made it that far. I just peek in every now and then. OpenAI, they of course, ChatGPT lives and breathes on the data, so they get all the data. What makes it so interesting, though, is just last week, this isn't new. They've been getting this data for a long time, but Reddit last week put in policies in place, no longer making it free. Of course, the CEO told us, Steve Hoffman, back in a couple of weeks ago at the Bloomberg Technology Summit, our data is extremely valuable. We're seeing a lot of interest in it, so they are now monetizing it. So there's $40 to $50 million that's expected from this.
So I'm totally stealing this take from Paul Sweeney, who's an investment banker, a former investment banker on media, and he was saying, like, this is gold. Like, you IPO and you say, I'm going to make a revenue stream off of giving my data to LLM providers, and that's how I'm going to wind up getting money, and then they do it after they IPO'd. Like, he was saying that they issued shares again. He'd be like, I would definitely buy it because of that. So I'm wondering if there are more deals.
Well, it's interesting because the stock is up more than 80% from the IPO, so they have executed on what they said that they were going to do. They did sign with Alphabet in January a $60 million deal to help train large language models, basically the technology beneath AI, but they have a total of $203 million so far. So that's for Reddit. OpenAI, which is interesting, a different side of it, not really to Paul's point, but in terms of the deals here, Dotdash, Meredith, and FT. I mean, it reminds me a lot of the content, the race for content in streaming. Now there's this race for data. They're just so, it could be just a gold mine going forward for Reddit in terms of all these different companies.
Did Reddit say how much of a cut they're going to give their users for selling their data?
They did not. That's a good point. Since I don't have a username,
they're going to
maybe
just let
you
them
do. Maybe you could bring that to them and ask for a royalty.
Don't take the bait. I'm just trolling. They're not paying them anything.
Abigail, thank you very much. Abigail Doolittle joining us there. I don't believe that you're on Reddit.
I am.
I don't believe it.
I am.
He
How
is.
do you know? I just post, everything about what goes on behind the scenes.
He doesn't do that. All right, coming up,
The
we're going
close
to
after
count you
dark.
down to the closing bell. Helen Hazen is Chief Market Strategist over at FL Putnam. This is Bloomberg.
The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious, to run new things, you can keep doing that. So what we're trying to adjust is our company should be the praise to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right. That's
so
right.
whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context
So we're looking now to
changes
the
everything.
market on close imbalance at 1 billion to the buy side.
This is the countdown to the close. Romaine Bostic alongside Alex Steele with 10 minutes, Alex, until the weekend. It's been quite a wild week here for stocks. We started off on Monday, that crazy meme stock trade, and I guess today, not a whole lot going on, at least not in equities.
No, but if you just look at, say, the week and then in comparison, the S&P and the NASDAQ 100, for example, and the NASDAQ are up for 4 straight weeks. We haven't seen that since February. Also, the Russell 2000 is up for 4 straight weeks. We haven't seen that since December. So, there's definitely stuff happening. And the S&P in materials, industrials, and energy, all the 3 best performing sectors today. And that's just my way of talking about the craziness we've seen in copper and silver, and even oil's having a nice rally today, gold at a record high.
Yeah, a lot of volatility as well in the Treasury space and in the FX space as well. So at least on a cross-asset basis, there was certainly a lot of action. Things really got battered around. And there are a lot of questions right now kind of about what comes next. Earnings season's kind of winding down. There's not a whole lot of economic data up ahead. We had a chance to speak with Christian Lawrence, the senior cross-asset macro strategist over at Rabobank, to kick us off to the close. Here's what he had to say about where the market goes next.
I think we'll continue to see inflows, and I think there's further upside from here. It goes back to that liquidity point of view, and it really raises the question, are rates restrictive? If we're seeing record highs in equities, we're seeing crypto flying, we're seeing credit spreads tightening throughout the last year, I'd argue rates probably aren't restrictive at the moment.
And that was Christian Lawrence at Rabobank, who helped to kick us off to the close. And here to help take us to those closing bells is Ellen Hazen, Chief Market Strategist at FL Putnam Investment Management. And Ellen, I am curious as to where you think things will go next, particularly given it seems like the big catalysts, the things that were really battering this market around, whether to the upside or downside, at least for right now, those appear to be kind of off to the side.
Thanks, Romaine. Well, they do say sell in May and go away. So I suppose it's possible that we could see a quiet summer where not much happens. But look, as we look at the S&P 500 this year, it's already up almost 12%. Earnings are going to be up 9% this year. So we've already expanded the multiple by growing faster than the earnings growth this year. So I wouldn't be surprised to see further volatility, and particularly volatility under the surface, not just the overall index level, but what's happening underneath. And so what you've seen, if you look month by month, you've seen a real tug of war between cyclical sectors like technology, like communications, and more very, very late cycle sectors like utilities and energy. And right now they're battling it out. And so even though the market seems as though it's gone fairly straight up, there's been a lot of rotation under the surface. We think that's going to continue. And we're not sure how much more on an absolute level you can get between now and the end of the year, given that we're already at a little bit of a rich multiple.
Do you think, though, that that could actually fuel even greater rotation? I mean, if you are of the belief that at least the broad market is kind of tapped out for the year, it seems like at least the general psychology would be people are really now going to start digging a lot deeper into sectors and individual names to find those returns.
I think that's absolutely right. You've seen it with the Magnificent Seven, where NVIDIA is up almost 90% year to date, but Tesla is down 30% year to date. So you're seeing the divergence in that part of the market. And then that's really writ large everywhere else. If you look at the different sectors, if you look at individual stocks, for example, if you look at the travel stocks, you saw Booking do really well last week while Expedia really tumbled. So it is not, it is a stock picker's market. It is not a buy and hold market. And I think we're going to continue to see more rotation under the surface.
Does the rotation go into cyclical sectors? I've mentioned industrials, materials, and energy, the best performing sectors today in the S&P. Do you need more cyclical exposure, and if so, where?
Well, we do want to increase cyclical exposure, and we're doing that by looking at both consumer discretionary cyclicals as well as some industrial cyclicals. So in consumer discretionary, we like Booking. That they had a really strong quarter. It's a very reasonably valued stock for high teens growth, which is pretty hard to find these days. And then on the industrial cyclical side, assuming the infrastructure spending goes ahead as expected, we like United Rentals. That's a company that maybe a lot of people haven't heard of, but they're the largest publicly traded rental heavy equipment company in the country. And for 10% growth, you're only paying 15 times earnings. So with the acceleration in infrastructure spend, they should do really well. So I do think you want to see increased focus in cyclicals going forward. But we do need to, of course, watch what the Fed is doing and watch what's happening in the overall economy, because if and when the economy slows dramatically, that's when you're going to want to start to exit those cyclical names and get more defensive. But we don't think that's going to happen in the near term.
So you just have to be really active on that. Where do financials fit into that?
Well, financials have been a stealth sector, performing quite well year to date. And if you look month by month, it's really in the last month or two that they've picked up. So it's not just banks that have done well. Some insurance companies have done well as well. Also, of course, some of the insurance companies have the strong property and casualty pricing that's been happening. And the brokers, of course, have done pretty well also. The key risk, of course, with the banks is what happens on the regulatory front, which we don't have a lot of clarity on right now. But from what we know, it doesn't look as though any increased capital requirements will be too hard. And, of course, the yield curve. And if the yield curve becomes normalized, then that's so much the better for the banks. So we're overweight financials. We like most part of the financial sector.
What about what's going on in the chip space, Ellen? Next week, we're going to get NVIDIA earnings, and kind of what for a lot of people is going to be that big look at the AI trends and adoption when it comes to data centers, adoption when it comes to chips. I know there are a few names that you like in that space that aren't named NVIDIA.
Well, there are so many ways to play artificial intelligence. As we're looking at chips, one thing you can do is you can own AMD. That's been a great stock for a while now, and they are not as good as NVIDIA is in the AI front, but they're getting there. They're getting there pretty quickly, and they have a great chip. We also like Lam Research, which is a semiconductor capital equipment company. You saw strong results out of Applied Materials last night, another semi-cap equipment company. We like ASML. They make the lithography machines, of course. So there are quite a few areas that you can buy that are going to be exposed to the AI trend. I think longer term, the risk with that is at what point will the hyperscalers decide that either A, they really need to monetize this, and are they able to, or B, they slow down spending on that AI spending that they're doing in the cloud and in the data centers.
Yeah.
We don't see that happening yet, but that's the key thing to watch for, because there is so much built into these stocks.
All right, Ellen, going to have to leave it there. Always wonderful to talk to you. Have a great weekend. Ellen Hazen, Chief Market Strategist at FL Putnam Investment Management, helping us count down to the close. Just about 2.5 minutes until we get there, Alex. And, of course, everyone looking ahead to those NVIDIA numbers coming out after the bell on Wednesday.
Yep, we had Imru will Silverman on, I think it was last week from RBC, talking about how the exuberance in the options market, the call options, isn't really there this time. I wonder if that's changed in the last couple of days, but and I have to also wonder if that changes the dynamic of when the numbers come out.
Yeah, it'll be interesting to see. And we get a few other names in that tech space here that will also help to sort of shape the narrative, either for the better or for the worse, as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Tim Stenovic and, Carol has a day off. Sonali Bassick in for Carol Master, who is taking a well-deserved, once again, 4-day week. Welcome to all of our audiences across all of our Bloomberg platforms. Sonali, how are you feeling?
I'm feeling good.
Right.
I am very much here for you today, Romaine.
Thank you. Somebody is. Tim, how about you?
I'm feeling good as well. I'm also here for you, but I'm also wondering where the action is when it comes to the equity market today. And I think kind of everyone, after it was a big week, thanks to a couple Fed-friendly economic data prints. But I think people are taking a step back, Sonali, and saying, okay, well, Wednesday we get NVIDIA earnings. That's like the next big catalyst for big moves.
Yeah, and in the middle of the week, it was kind of like everything is fine, everything was exuberant. You had some key moments really past the market, but there was divergence in indices today. And when we looked at the bond market, we are back above 480, guys. Yeah, I was looking at that 480 level all week and seeing if we were going to breach it. And indeed, we have, although still some optimism there in the bond market around the potential for cooling inflation and lower rates ahead.
I just feel like the equity market just doesn't care about the bond market, like whether they move in tandem, and you have seen that happen this week, or you see higher yields. I mean, it feels like if we're going to set up for a range, anything below 5 for the 10-year seems to be something that the equity market can digest at this point.
Yeah, that's the thing. I mean, we keep pulling our hair out over what the Fed's going to do next, what's on WIRP, and I get it. I get that there's got to be some sort of awareness as to what the Fed does next, but I don't know. I mean, we hit record highs yesterday. It looks like we're, at least on a couple of the indices, we're hitting another record highs here. So I don't know, if 5.5 didn't break this market, and that's the velocity to 5.5 didn't break the market, why is saying at 5.5? Why am I supposed to believe that's going to break the market as well? Let's walk you through the numbers here, because a relatively good day and an extremely good week here. The Dow Jones Industrial Average would spend a good portion of the day